There we go. I think I'm live. Let's get the camera set up right here. That's as good as I'm going to get, I think. Oh, okay. There's my email saying that I am now live. So I'm live. Let's answer some questions. Let's see what we have. Right out of the gate, what are your thoughts on Biden dropping out and endorsing Kamala? I'll be honest. My first instinct when I heard that Biden had COVID was he doesn't have COVID. This is step one in him dropping out. You have to give him a way to drop out rather than him just say, "Okay, you're right." He's sick now, so this kind of looked like it might have been good cover. I don't know, but he couldn't win. It was becoming clearer and clearer that, well, I shouldn't say he couldn't win. It was becoming, I think, more evident to everybody that he would be extremely challenged in his ability to win. The future is unknowable, so you can't really rule out that he could win. But it just seemed that he had age issues with his cognitive awareness. So, I mean, that on its own, for somebody in that office, yeah, I think it's time to step aside. I don't know if Kamala Harris can win. I think she has lower polling numbers than Biden. The only reason Biden, I think, in the end had lower numbers is because not because she rose up, but because he sank. I think Team Trump is even more emboldened by this, saying it's just this, she was a prosecutor in California. Look at the state of California. Look at the state of LA. Look at the state of San Francisco. She wants to import that to the rest of the country. It is, they'll play up on the whole woke element of her identity. I don't know if she can win. She's been in the background for how long? You've got a short period of time. I don't know. I don't know if they have a chance of winning at this point. So I don't know that it changes much of the outcome. It may give markets a reprieve from the relentless Trump trade that we'll hear about for a period of time until we see what their response is and what the Harris campaign is going to look like. I think on a debate, she would be a lot more challenging because she is a prosecutor. She was a prosecutor. I think it would be much more challenging for Trump in debating her. But Trump doesn't play fair. So unless she's willing to get really dirty, he doesn't play fair. On the same topic, which Democratic POTUS VP combination has the best chance of winning, in your opinion? Anyone you like among the possible choices? Well, I'm not a fan of the current Democratic Party. I think almost anybody leans too left, and left, while they're good intentioned, really only think about the presentation of what they're doing. They don't think about unintended consequences. I don't know if they have within them the ability to enact tough love. I think that's the problem, and you get a slow bleed of good intentions gone wrong. I get the whole idea behind trying to right perceived or real injustices of the past. Okay, that's a noble mindset to have. But when you ignore what is obvious consequences of policies of saying, if you're from a certain racialized group and you're shoplifting and it's under a certain number, you're kind of owed it. When you do that, look what's going on, right? You have these unintended consequences that you have to think about. I know I think about these things. I have Airbnb'd my house in Costa Rica, and the first thing that went through my mind is all of the things that could possibly go wrong. All of the things, all of the negative outcomes that could possibly happen, and you take steps to prevent those negative outcomes before they happen, as opposed to showing up thinking everybody's wonderful, everybody's great, everybody's fantastic. If there's problem, I got to consider their background and that they, I don't think so. You have to have some common sense about things. You tell me someone in the Democratic Party that still has common sense. I don't know who does. Joe Manchin, maybe. Quick guide to the reactions on your new Mac. Heart shape using both hands. Thumbs up, 2 thumbs up, single thumb down. And is that there's a thumb down, nothing going on, 2 thumbs down. Oh, look at that. 2 thumbs down, 2 thumbs. Okay, that's pretty clever. What is this? A rock sign? You said does something? Lasers. Oh, 2 hands. I got to do 2 hands to get the lasers going. Oh, look at that. Isn't that the coolest? Is that YouTube or is that my Mac? That's interesting. What are your thoughts about this speculative trade I just made last week? Sold July 19th puts at $14 on ABR with a 35. You sold July 19th puts premium of 35. So they got put to you. They must have been put to you because July was on Friday. ABR was low 13s on Friday, so you didn't make out too well on that. Planning to sell at 14 if assigned. Well, maybe you mean August puts, not July puts, because if it's July, you've been assigned, you're going to have to sell in the morning. 2.5% return over the 2 days. I don't see where you're getting 2.5% if you sold the July 14s. Even if you sold the August 14s at 35-cent premium, yeah, I think you might want to retype that in because I think you messed up on the typing of what you actually did. What is your take on following U.S. Congress and Senate trading for signals? It's not my thing. It's not my thing. How do you know when they're doing something, if it's a signal that they know something, or if it's just them thinking they know something, or if they hear something and go, oh, that's going to be good for this, and they don't know anything more than the person on the street? These are not finance educated politicians in the least. Maybe they hear insider stuff or they have an opinion on something, but I'd have to be shown that one person's portfolio continually outperforms, and if it outperforms, how is that legal? Right? How is it legal to get that done? So it's not my thing. Step by step, how you computed a 10% return on capital invested for HG by selling 405 puts for August. Well, the 0.047, multiply that by 25,000 because that's 4.7 cents per pound, 25,000 25,000 pounds. I think you're $1,175 or something like that. And then if you look at the margin, it's usually about 8 to 10%. So even if you kept it in US dollars, you got about 8,000 to 10,000 on margin. So if it's 10,000 on margin and it's 11.75, you're what, 11.75%? It's pretty straightforward. A bold move of your opinion to think 40% probability of a rate cut for the July FOMC. Please share your thoughts. Well, if the committee is of the mind that they're going in September, I think the data is giving them enough evidence. And if they believe this stuff works with a lag, And if we go back to the very beginning when Powell started raising rates at one of his press conferences, do you really think if we raised rates earlier, it would have made a difference? Well, then that thinking has to apply for when you're cutting rates. Do you really think if we cut rates later, it makes a difference? If not raising earlier wasn't going to make a difference, then cutting earlier can't make a difference. So cut. If you're going to cut, get on with it, right? Let's just do it. The data there is there to support it. And if you believe the lags, then do it. Everyone else is doing it, so do it. I think they're good to go. If they don't go, it's just a difference of opinion. Not that I'm saying go ahead and cut, even though the data doesn't support it. The data supports it. If they don't cut, it's a difference of opinion, not a difference in numbers. Did you watch All In this week? Yeah, I was in the gym, downstairs in the gym, and I had it on in the background. I didn't really enjoy it. So you had 4 people talking politics for over an hour. I can get that anywhere. I mean, I can tune in almost anywhere and get 4 people on a screen talking politics, get 6 people on a panel talking politics. I can get that almost anywhere. What I can't get anywhere is a discussion about their particular industry, about the VC industry, about the investment space, about the new innovations that they're seeing, new business startups that they're seeing, their view of the economy from their VC space. I can't get that anywhere, but 4 people talking politics who have not been in politics, 4 people with an opinion. I can get 4 people with an opinion anywhere. There's no shortage of 4 people with an opinion. You listen to it, it's like, I don't know that they have particular insight into any of this. None of them are inside Washington. None of them are high-level senior positions with a podcast giving us their point of view, their view from the inside out. So it's like, what do you got? You got another CNN panel. Well, you got a Fox News panel. You got an MSNBC panel. It was just another political panel. It was on in the background. I thought, there's nothing interesting here at all. I like it when they stick with the universe that they come from. Then they have really interesting things to say because it's a nice perspective to hear what 4 of them have to say about that space. I think I'm more interesting if I were going to talk about the CFA space or the market to a certain degree. But if I start talking about the Supreme Court, I may have an opinion, but so does everybody have an opinion. I am in no way educated upon the Supreme Court or have any access to anybody on the court that's any better than anybody else on the street. So I'm just another guy with an opinion when it comes to that. So they have an audience and they talk, but I just thought there's nothing here for me that I could, if I change the channel to Fox News right now, I'm sure I'd find 4 people on a panel talking about this. Right. And I'm sure this week they'll talk about Biden dropping out. And if you turn on any news program tonight, go to Fox, go to CNN, go to MSNBC, and it's 6 people on a panel talking about this. Nobody mentioned a word about gun control. Is it even worth mentioning it anymore? Is it even worth mentioning gun control, thoughts and prayers and gun control? Is it even worth it anymore? Or is it just an acceptance of, this is the modern day version of the interpretation of the Second Amendment, and, it is what it is. Nobody talks about it. Nobody mentions the number of mass shootings to date. Nobody talks about the number of people who die every day in the U.S. at the other end of a gun. No one brings it up. Why? I don't even know that it's even a thing to discuss anymore. Because I think the NRA has been very successful in changing the story. It's not guns. It's mental illness. It's not guns. It's mental illness. So if there are people out there mentally ill with guns, shouldn't you have guns too? What stops a mentally ill person with a gun is a mentally stable person with a gun, right? It's that is its own issue. Oxy goes to 57.50. Why not sell 1 month expiration puts that are deep in the money? Yeah, I've done that before. I've done that. Want to get your take on the consumer. Luxury companies like Burberry have issued profit warnings. Pepsi last week said consumer is pulling back. Consumer credit card auto loan delinquencies are rising. Yeah, I think the consumer is in trouble. I think a significant amount of the consumer market is in trouble. The lower 50%, I think, are in trouble or challenged. The bottom 20% are probably deep enough in that, I mean, what can they do to make ends meet at this point? I never used to think too much about that. But lately, I see I'm, again, extremely price insensitive. But I see it. And it doesn't take much math to say, okay, you're going to live in Toronto on 60,000 a year. No. How are you going to get that done? I don't have the math to get that done. So you got a job making $30 an hour. That's 60 grand a year. I don't see you living in Toronto anywhere on an after-tax basis, then on an after-rent basis, and then on an after utility and expense basis. What are you eating? All right. If you're a pretty girl, you might be able to get by because you can go on date after date after date and get free meals. But if you're a guy making 60,000, you're not getting free meals. I don't know how you get that done. Even if you went to 100,000, you're not living any kind of respectable life in those cities. So, yet there's the population is there. So it's either you're living at home or you're sharing a very small place with 6 other people to get that done. The quality of life, I think, for the 20-something-year-old that still wants access to a city, I think is nowhere near the quality of life I would have had when I was that age. So if the economy is only working for half the economy, that is a bit of a problem. Look, there'll always be the poor. There'll always be the bottom 10% and the bottom 20%. And a lot of them are there because of decisions they themselves have made. But now you're having university graduates getting good jobs, and good luck ever buying a house. Good luck renting any decent size apartment. Good luck with that. When you get to that point, you have to stop and think, wow, what's going on here, right? So on the luxury end, that is interesting. But I think what's going on the luxury end is an exhaustion of this idea of ever increasing value for something. When you can clearly see that it just doesn't have that kind of value. You see it in higher end vehicles. You see it in the whole watch category. What was I reading this weekend? Used Rolex prices are just coming straight down because at some point it's like, what am I spending this money on? You're going along with this whole asset bubble craze. Yeah, I was I've been wondering for some time. It's been not just recently, but for some time I've been looking at the whole situation saying, look, I can afford this stuff, but I can see the price on this stuff. How's the average person getting by on this? So I think, well, when I had my professor salary, would I be buying this stuff? The answer is no, no way would I have even entertained spending some of the, on some of the things that I do. And even when I go to Costco, I mean, I like steak. I like a good steak, so I buy the most expensive one. I buy the large size, and then I cut it up myself. I buy the top cut. If I were on a professor salary, looking at the price of this thing pushing $300, I don't think I'd be buying it. So how it's clearly people are buying it because there it is on the shelf. If people weren't buying it, it wouldn't be on the shelf. I'd have a hard time getting it. Who's buying this stuff? Yeah, so it's not surprising to see the consumer suffering. Trump's policies to reduce dependency on foreign countries, particularly in semiconductors. So you got to be careful what you do when you do that stuff. Trump is not a thinking man's president, right? So he sort of just wants what he wants, period. He'll listen to other people, but once they leave the room, he wants what he wants. Think about a household. Think about me, for example. I don't do my lawn. I have somebody else do my lawn. I outsource that, you can say, to another country. These people who show up do my lawn. You could say, for me, that's an import. I'm importing that service if we think about my household as a country. Because it's not worth me doing it. I would have to dedicate other resources or give up other things and dedicate resources to getting it done. It's not worth me doing it because I pay $40 to have my lawn done every 2 weeks. $40. It's not worth it for me. So what he wants to say is years and years of capital allocation to to allocate resources efficiently, such that the result we have today is the result of years and years and years of building on efficiency. Let's throw a wrench into all that, and let's get the US doing things that it did not want to do because it found a more efficient way to do it. So let's make the US do it. You're going to have to make the decision of paying either higher prices, or what are you going to give up to free up the resources to get that done? What higher value adding process are you going to give up to get that done? That would be the decision I would make, is stop outsourcing your lawn cutting. Keep the money in the household. Great. What do I give up? What is it that I'm doing that I should give up and go out there and do that? A low value service. I would be doing nothing but giving up a higher value service. So I think you have to be careful about these thoughts and the idea that, oh, it's all going to come back to America. America is going to be a powerhouse. I would argue that if they start bringing these things back, it would become a less efficient country with lower profitability, not higher profitability. So I don't know that that's such a good idea. What commission percentage should I charge? Okay, I don't know if that's by day or my dad. What percentage commission should I charge by dad? Oh, your dad, for investing his money in real estate and getting him 50 to 65 net returns in 5 to 7 months. What commission should you charge your dad? Nothing. Right? Nothing. It should be, how is your dad going to thank you for that? I don't know why it's incumbent upon you to determine what your reward should be. If you're doing that for your dad, he should be more than happy to share it with you. I would be cautious about investing family money, because if you lose it, that's not good. I don't know. I don't know the answer to that. That's family. That's a family dynamic. I don't know. Thoughts on the CrowdStrike outage? Stuff happens. I mean, as a business, I've had that in the past where somebody in IT writes something and fixes something, says, okay, this is good, it's ready to go. And rather than wait for a time when we take the site offline and deploy, they say, I'll just do it live. And they put the change on the site live and it crashes the site. It's like, okay, well, you learned your lesson there. That was stupid. So stuff happens. It shouldn't happen at that level. There should be lots of safeguards in the way, but there have been uh, trading houses before that meant to sell 4,000 shares and sold 40,000 shares. What they call the fat finger mistake. Hard to believe, but okay. Sounds like a mistake happened. Sounds like it's an event, not a trend. Sounds like it's probably not going to happen again because now it happened. They're going to have policies and safeguards in place to make sure that shit doesn't happen again. So going forward, they'd probably be a safer company to do business with because they've made this mistake. So they're not going to make this mistake again. Question is, what's it going to cost them? Some companies may decide that any losses they have is their fault. How many free months are they going to have to give? How many gifts are they going to have to give? How much money are they going to have to pay out? What's the fallout of all this? What opportunities do you see to start a new business in today's time? Lots of opportunity. There's always been opportunity to start a business. Currently, I do import-export of spices selling in EU, but I see a lot of competition, less margin, thinking of a switch. So this is the thing about business. If it's easy to do, if it's easy to get into, if your neighbor can start doing the same thing, there's not much there. It's everybody's doing it, right? You're not doing anything challenging or anything difficult. If you have the greatest selection, it means that you have enough money to afford inventory. There's some value in the inventory that you have because you have the greatest selection. Unless there is something that you're doing that is difficult to replicate, that is difficult to copy, yeah, you're going to be in a highly competitive, low margin business. There's nothing wrong with being in a business like that if you can figure out a way to make it a high margin business or a high volume business where everyone just uses you. It doesn't sound like if somebody came to me with that idea, say, I want to import and export spices, I think, that doesn't sound too interesting to me. That doesn't sound high volume to me, unless there's a particular source of, let's say, saffron, I don't know, that you've been able to pretty much tie up all the supply in the world because you have the sole source or the two big suppliers and you've bought all the supply off the market. You're the single distributor of this, and it is something that is in demand that everybody wants. Unless you're able to do that, then yeah, you are in a low margin business. To get more margin, I do set up a physical store, but it takes retail. More energy and margins are not increasing. Yeah, retail is brutally hard. I have background in finance, logistics, started this business during COVID. So during COVID, it probably made sense that how can we get things that were normally in a store into a household through online delivery. I don't know anything about that market. I know that retail is tough. The consumer is fickle. You got to be in the consumer's way, especially for something like spices. You might have a, amateur chef market. But for the most part, any spice I need, I can find at Costco. I mean, most people can find what they need at Costco unless they go into a higher are doing something very particular. So if it were somebody coming to me with a business idea, I think I'll pass. It does it. There's nothing here that sounds like you have something that that other people can't replicate easily. Any updates on Cap? Did you sell? No, I didn't. I didn't sell any of my shares. I'm not selling any of my shares. I had puts. They all expired. 46, 45, 44, 43. All and cap rates above that, 48 and change. So none of them were put to me. I don't know. I don't have any puts right now. On any weakness at all, I will sell puts. But selling puts on the way up, I already have. I still have 64,000 shares, which is a position that's probably bigger than I really care to have. Plus, I have shares of Killam, I have shares of Minto, shares of Interrent. My allocation to Canadian apartment REITs is quite large. I'd probably be only interested in selling puts now on weakness, and then thinking about well, if we do get a rate cut Wednesday, that's going to give a good boost to cap rate. That should break the $50 price and put it above $50. I might consider selling calls on some of them. I might consider selling calls, but I have no desire to do anything. I get my rent check on the 15th of every month. I'm good with it. Thoughts on a bull spread on TLT? Looking at 94.89. Sell a put, but have limited capital constraints. Well, if you have limited capital constraints, you could do a bull spread 94.89. I don't know how much you'd make on that trade. You'd want it to be above 94. I don't know what the cost of getting that done is, but we can look really quickly at where we are here. I see copper up. Where are we on the market? Oh, SPY up 18 points. Look at that. Okay, let's look at TLT. And I don't know what date you were thinking of doing that for. But let's just look at the August and see what that pays and see if that's even worth it. The 89s, they closed at... So what are you going to do? You're going to a bull put. Sell the 94s for $1.96. Buy the 95s for $26. You get $1.70. Oh, I see. So you get $1.70. The most you can lose is 600, and you get 170. Above 94 by August. Be careful. You have Jackson Hole coming up, and the theme of Jackson Hole, to put it bluntly, is does this shit even work? It is a discussion about the effectiveness of monetary policy, because we didn't see it slow down the economy at all, really. So the theme this year is, in layman's terms, does this shit even work? So it depends on what conclusions they get from this, and if they conclude that, that, well, I don't know what they would conclude, but they might come up with conclusions that suggest that, what if they come out and say, it does work, but the neutral rate is 6.5%. Then, that hits the market, you could have a sell-off. So you want to look, between now and August, you want to have an idea of what are the catalysts that could push it over 94, and what are the threats that could keep it under 94. And with Jackson Hole coming up, plus you have Powell's speech. I don't think that would be bearish. Yeah, I sold 93 puts. I don't see a problem with that. CFA's time commitment. Should I focus more on gaining market experience or a balance of both? I want to get the CFA for merit to help me get into finance interviews. So, let's say, I'm trying to come up with a good analogy. Here's a good analogy. Let's say that you're going to a pre-game party and you're wearing, the team shirt, you're wearing the team colors, and you're all into it, and you show up at the at the gate, and they let you into the field. Okay, in you go. You're part of us, and people start asking you about the team. Well, what do you think about this person? This, and you don't know anything about any of the team players or anything. It's gonna be very obvious to a lot of people very quickly that you don't know what you're doing. You don't know what you're talking about. How can you be a fan of the team? You know nothing. So think of the CFA as wearing the team jersey, and then the conversation in that room as the expectation that, well, if you're wearing the team jersey, you must know something about the team. So the credential might get you, well, first it may get you in the pile that's not immediately rejected. And then depending on the other experience you have, it might get you in the room. But in that room, if you can't talk markets, that's what solidifies it in the room. If they see that you're already there, you are aware of what's going on and you can talk markets. So I think you got to have both. I think you got to wear the team jersey, but you better know who the quarterback is, right? So I know you don't pay taxes in your outside managed account. Well, it's not that I don't pay taxes. If there's a stock that pays a dividend, the U.S. still has a withholding tax. So there's the withholding tax on distribution. So you try to pick your targets such that they are tax efficient. In other words, very low turnover. At least that was the mandate, low turnover. But every 2-3 days, I keep getting a trade confirmation. Here's your trade confirmation. It's like, what do you guys do? Stop with the turnover. I want extreme efficiency here. There's no withholding on capital gains, I guess. So I guess that's not so bad. Do you pay taxes in the return you get there? Is that also tax exempt under Costa Rica? Right now, it's tax exempt. There was an EU problem. The EU looked for a change in Costa Rica's tax laws. I don't know why the US had something to say. The EU had something to say about it, but what they're saying is you could have a double exemption, where you are exempt from taxes in one country because you are a resident in another, and because the gain was earned outside of that country because it's territorial tax, you'd be exempt in yet another, so you'd have a double exemption. And they wanted that closed such that there was a minimum 15% tax, which could have been paid through a combination of withholding taxes at the source. And if that didn't equal, so if you made $1 million, let's say, and you paid, let's say, 80,000 was withheld of the $1 million in distributions that you got, 80,000 was withheld. You'd owe another 70,000 at least to get to 15%. But if 200,000 was withheld, then you would pay no tax. That last summer, I think, was before the Costa Rican government. There were 4 bills that were proposed. I think one of them had to do with that. I don't think it went anywhere. I don't think it went anywhere at all. When do you think bond prices will reflect uncertainty over the government's ability to service the debt? You said that you held long duration strips. Do you expect to exit those positions? Not now. I think at some point it may be an issue, but as far as what I'm holding, keep in mind, I got them at very high yields. I got some of these strips, especially the 2048s. I got some of them yielding north of 5%, 5.4, 5.5% when I got them. So they will grow at that rate for the next 24 years. I don't know why I would sell them. You can have bond yields that reflect higher risk of debt, but you're not going to have defaults. So if I'm okay holding it to maturity, what do I care? How am I going to lock in like mid fives, 5.5 on? And I did a lot of bonds. How am I going to lock that in for the next 24 years any other way? If I get out of that, then it's like, well, where do you go? So I'm not looking for any kind of short-term gain on that. In my mind, that's a shrinking duration hedge, which is nice. So every day, the duration, the interest rate sensitivity on it shrinks a little bit. I mean, it's a long-term bond, but every day, because duration is a function of time, the sensitivity to the interest rate is a function of time, it shrinks. It shrinks. So I'm not that concerned about it. I have an asset whose risk profile shrinks going forward, again, at a very, very slow pace, but still mathematically it shrinks going forward. And I've locked in a rate of 5.5% with no tax and no withholding. Now back that out. Imagine, well, what would I have to earn to have a 5.5% return on an after-tax basis? And what would that be pre-tax? So I'm in one of those positions where I look at those fixed income and I say, why would I ever sell those? Well, what do I care about those? I'll keep those forever, unless you get a crisis and interest rates, drop to the zero line and that whole curve flattens out. I would say, okay, why, if the bonds are now trading, I bought them at 28, the strips, 28%, 28 cents on the dollar. So if they're suddenly trading at 84 cents on the dollar with 23 years left to go, I would say, do I really want to sit around for 23 years just to earn the other 17% of par? At that point, I would say it's not worth it, right? Then I would sell. Market outlook. How do you know that LSEG forward EPS operating earnings and just reported earnings? Usually the forward is always operating earnings. It's always that analysts, when they forecast earnings, it's hard to forecast what happens below the line, below operating earnings, because those are usually one-time events, and usually you put a zero on one-time events, so that when you're looking at operating earnings and you look at a company's reporting, typically the focus is on adjusted earnings. You adjust for all the one-time events. Because they are one-time events. It's just, if you have a history of having one-time events, then your one-time events should be predictable in aggregate without knowing exactly what causes any one single one-time event. So by focusing on operating earnings, we are, I think, in essence, overpaying for a market. How much value do you put on a good CPA doing your T2 corporate returns? They get to check the box of the T2 that says CPA prepared the return. Must be worth something. Yes and no. I've had Deloitte do tax returns for me, and I still get audited. That happened, 12, 13 years ago. I got audited because they made a mistake. So I got audited. I had CPAs doing my taxes this time from Grant Thornton. What a bloody freaking nightmare that was. I basically had to do my own personal tax return because the person doing it was so far off, and then wanted to modify my numbers after, saying, well, I'm getting different numbers. Use mine. I don't know where you're getting your numbers for, but use mine. Mine are solid. So we used mine. If I'm going to get audited, it's going to be my fault, not somebody else's fault. But Grant Thornton this time, I think, really just took the opportunity to say, oh, look at how much this person has. Billable hours, billable hours, billable hours, billable hours. It went on for 7 months. 7 months started the process with them. 7 months. And you couldn't get a tax return in by April. They were end of June. Still every day, are we there? Are we there? Sometimes no return emails at all. I've never been ignored as much. They just saw me as one big pile of billable hours. This is the problem with the billable hour model is you are not motivated to solve your client's problem. You are not motivated to finish your client's file, because as soon as you do, you don't have billable hours anymore. I would strongly urge anybody who needs accounting work done to get a quote up front or to get a range in a quote. But this billable hour bullshit. Now the accountant sees your income. So you want to talk about personalized pricing. Right? If you have enough that you're using an accountant to get done, your accountant sees how much you make. And you go to the big ones, Grant Thornton, Deloitte, all these big billable hours, billable hours, billable hours, billable hours. And they don't do a good job. Understand what happens when you go to these places is you pay partner billable hours, and the partner gives it to a junior intern or someone really junior to do it who doesn't know what they're doing, but you're going to pay partner hours each time. Yeah, I guess having, a thing that says a CPA did your return has some value. But that still doesn't stop you from being audited. You still have to rely on the CPA knowing what they're doing. And of all the CPAs out there, you're going to tell me they're all in the top 10%, they're all in the top 20%. There is a distribution of ability among CPAs. Some have no idea what they're doing. I can tell you that. Some have no freaking clue what they're doing. I used Deloitte. One of the partners did my tax, did it wrong, called a certain thing a capital gain when it was really income, and I got hit with that big time. I think it was like a year and a half audit. I finally just said, give me a number I can live with just to end it. Where were they? No help at all. And they wanted $25,000 for fucking up. They didn't think it was their problem. Listen, here's what the world has. It's a lot of average people doing average things. Okay. There just aren't that many really great people out there doing great things. If you look at the distribution of ability, it might be the top 5%, the top 10% of people that are really good. The rest are in every population. Take all the CPAs. Okay, a CPA knows more about tax than the person on the street, but they should, right? But if you take the distribution of CPAs, half of them are below average. Half of them are probably a danger to their clients, don't know what they're doing. The other half, so they start getting better and better, but it's not until you get to the, at least 2 standard deviations above the average that you start getting to good people. So wherever you go, you're going to have, you have to understand very quickly in that organization is 68% of them are pretty much average, in and around the average, 1 standard deviation above and below the average. 68%. 16 of them are dangerous. 16 of them have no clue what they're doing, and another 16% are pretty good. That's what you have to come to terms with very quickly when you use services like that. Is you must accept that you are going to be faced with a lot of average people doing average things. That's it. So I don't know that it's not going to stop you from getting audited, and not all CPAs know what the hell they're doing. Does that answer your question? When you sold your business, did you just accept the price they proposed or negotiate it? Oh no, it was I can't talk about it or the negotiations or anything like that. But no, you don't just accept the number that they give you. Did you make a valuation of your business? Yes, I did. Control your own destiny, or someone will control it for you, right? If you're selling something, you have to show where the value is. Simple as that. So my house was up for sale here, and the agent would show the house, and I kept thinking, but I'm the best person to show the house. I'm the one that upgraded everything. I'm the one that can tell you that door over there, that big door that you see over there, that whole thing, that was $10,000 for that door. You are not coming through that door. Once you lock that door, there's 3 locks that go in. It's almost like a panic door. You're not coming in that door, right? That's a big deal. If you have kids, if you want safety, you're not coming through that door. What about these doors over here? See these doors that are done? Those are not builder doors. That's cherry wood. So I had those built specifically, and then I had them stained. And you see those handles on there? Those are really heavy wrought iron handles. They were not cheap at all. See, you need somebody to say that. You don't want an agent coming through saying, look here, look here. So I think I'm the best person to sell my house based on the upgrades. I can describe what they are. If you're selling your business, you better be presenting where the value is. What are you selling, right? So no, you don't just say, well, that's your offer, thank you very much. It is a negotiation on both sides. You'll negotiate for price first, and then due diligence comes. That is a microscope up your asshole, by the way. Due diligence is invasive. It is invasive. Everything, every stone is overturned. You've got to open up your kimono and show everything. That's the only way. And so then they verify that, in fact, every dollar you said you made, you actually made. Everything is checked. If you lied at any point, if you made anything up at any point, they will walk away. So there's no point making up a story and not being able to back it up. But no, you negotiate it. Almost every point is open for negotiation. And there's a lot of points to negotiate on. For your weekly new positions, are you willing to have a recurring chat of previous week's positions or performance adjusted for options use assigned? But well, when I do the oh my back. Right now, when I'm doing new positions, I'm just saying new positions. When it moves to the applied level, it's my positions, not just new positions, but here's all the positions I have. Week after week, here are my positions. Here's what I have. So I have positions that don't show up in new positions. I'm putting that out there on new positions, new ones that I've taken. But if I add to a position or decrease a position, I don't find that to be a new position, right? It's not a new thing. So sometimes I add to a put. Sometimes I will add to certain shares that I already am long on, but I'll just add more. So when I do it in the fall, it's just going to be in spreadsheet mode, showing all my positions. That's all it is. I'm just going to show them all, and then there'll be a video each week, because you want to see the options expire. You want to see exactly, well, how many of the options that you have actually work out for you. How often do you take a loss? I am proud to say at this point in time for this year, I calculated my return as of the 12th of July. And keep in mind, I was offline for a couple of months because of the move. I couldn't open up any account because I was neither here nor there. So I believe April 1st is when I first started being able to operate in my own account, not in other accounts. 15.68%, which isn't too bad, considering I do very low risk strategies and most of my underlyings are value stocks. 15.68%. And that is in the bigger of the accounts that I manage, and the smaller of the accounts that I manage, because it's smaller, you're more constrained. I think it's like 11 or 12% on a money weighted basis, not a time weighted, but money weighted basis. So the puts that I do, many of them expire worthless. So I get all of it, but I think it would be worth it to see more than just new positions. But what are your existing positions? So you said in the market outlook that you will sell puts on TLT. depending if the premium is worth it. I did Friday. I sold 93s. What minimum return on capital do you look for when selling puts? TLT, you're not looking for. You're not going to get big stuff on TLT. What you want on TLT, because implied volatility is typically under 20% on that. So being that it's fairly safe in that respect, it's not a highly volatile underlying. You're not going to get big premiums, but you want to be diversified across different implied volatility risk categories. So you want some underlyings that have volatility under 20%, some between 20 and 30, some between 30 and 40. And once you start getting over 40%, you got to be really selective of why you're doing that, because there's a lot of risk associated with that. I'd say 25 to 35% range is really the sweet spot of where I like to play. If I can get 30% on a good underlying, 30% implied volatility, great. But usually it's mid 20s. TLT is low. So when it's low and the premium's low, it's not that exciting. So is there a better use of my capital than TLT? Yeah. Is there a better, when volatility is higher on TLT, is there a better risk-adjusted return? A better dollar return? Sure, but adjusted for risk? Probably not. So it is a lower dollar return that I would say has, you can't really use Sharpe ratio with options, but you get the idea. It just has a better ratio of return to risk. Lost them. Let's go back up. Where do we leave off? What's your opinion on having well-diversified portfolio, 20 plus stocks, versus having more concentrated portfolio, 5 to 10 of select stocks you have in conviction? 20 plus is hard to follow. That's hard to follow, because if things turn on you, managing that many stocks, I think would be difficult. Not only that, if you did a factor analysis of those 20 stocks and you did a factor analysis of 10, you might find that you have the same factor exposures. Just you're using more stocks to manage the same factor exposures, right? So having let's say the only factor you care about is beta. Having a portfolio with a beta of 1.2 at 10 stocks and having a portfolio with a beta of 1.2 at 20. That let's say that they're all correlated about the same, which equities usually are fairly highly correlated, especially the higher the beta, usually the higher the correlation, usually. I think 20 plus is a lot. 5 is too little. 10, I think I have more than 10 names, but I don't think I have more than 20 names. Let's do a quick inventory here. I'm in the wrong account. I'm in the smaller account. I'd probably say I have closer to 15. I look at some other stocks and I think, well, I could sell puts on this, and I think, but you're really selling puts on the same thing. I mean, if you have these two stocks in energy, or for example, with utilities, I have XLU in the US and I have Enbridge in Canada. NextEra is out there. I think, depending on what earnings look like, it might be worth it. But NextEra is the biggest holding in XLU. I'd be overweighting it on versus XLU, and I'm not getting any extra diversification. So if I feel really good about it and it's the biggest holding in XLU, why not just do more with XLU, right? Why look for three things that are the same when I could just concentrate them all into one? Obviously, XLU has regulatory asset component. Regulatory asset is something else with the utility. They have regulatory assets, regulatory liabilities, and that is a function of what they collect versus what their costs are. Sometimes they end up making more money than they should or less money than they should. So that sets up regulatory liabilities and assets that have to be amortized over time. So I think you mean the growth in their assets is regulated. How much of a duration play is XLU? It is a duration play because the cash flows of a utility are seen as rather bond-like. So it will respond to changes in interest rates. XLU versus TLT. So the difference with TLT is your dividend that you get as a function of the income they receive, which is from fixed rate coupons. Whereas with a utility, so with TLT, if there were no changes in rates, there'd be no change in price of TLT because the coupon income would be constant. There'd be no growth in the coupon income. With XLU or with a utility, you have a numerator and a denominator. You have a numerator that can grow, and you have a denominator that prices those cash flows as a bond. So in essence, you have a floating rate bond whose coupon is tied to the growth in assets. And the growth in assets is tied in part to the growth in the infrastructure and economic activity. So it is I think a better performing bond overall, but you are subject to downside risk as well. What if management doesn't manage the company well? Applied options, you teach a lot of strategies. Do you sell all of them, or do you have a personal preference for any specific ones? So I mostly sell puts because uh, uh, let's say that I allocate 100,000 to selling puts. That's what I have. I'm going to put aside 100,000. That's going to act as my margin, and I'll sell puts for whatever theta I can get. The return, and that's all capital gains. Even if you're taxable, the return I can get on that 100,000 is quite high. So you would think, well, why not do that to your whole portfolio? It's hard at the size that I have to find. I'd need a staff to get that done, to be able to find the right underlyings at the right time. For the other type of strategies that I do, yeah, I do use them, but I don't do it all at the same time. So let me explain that. I like risk reversals. Sometimes, especially after a big sell-off, it's worth doing a risk reversal at the level of the index, not at the level of a stock. But I don't mind stepping into risk reversals, right? So I may buy a call. I may think, I like this stock, let me buy a call. Stock goes up, great. I'm making money on the call. Stock goes down, I'll then step in to selling the put. If it's dropping and dropping, I'll say, okay, well, that allows me to go much deeper after the fact to sell the put, so I can sell the put there. So most of those complex strategies end up being the result of stepping into those strategies to change the risk profile of what you want. But it's very rare I would ever start with a very complicated trade. It would be very rare that I would do that. Like a trade that has four legs. Why? Like, what are you thinking when you're doing a trade with four legs off, out of the gate? Step into one, buy the call. You could do quite well, I think, if you just on Monday morning bought a bunch of calls and then waited for the market to tell you what to do next. So some of them will go up, some will go down. Wait till Wednesday. Some of the ones that went up will go up even more. Some of them will retrace, and some that went down will rebound, and some that went down will go down even more. Well, now the ones that really went up, you can think, can I take profit? Or, maybe I can sell a call for the price I paid for the original call and step into a no risk spread. For the ones that really went down, maybe I can sell a put much lower. Maybe implied volatility is spiked and I can completely pay for that call. and that by the end of the week, I would seem to think that you can consistently do well by letting the market tell you what your second leg is going to be, right? You mentioned that the PhD has made you a better investor due to the research methodology. Do you think a research methodology course could provide the same benefit as pursuing a PhD? What the PhD does is it causes you to think about particular things. So let's say you say uh, there's an indicator that says this, right? Um, the way that you're trained to think is, okay, so the indicator says this. There are two things I'm concerned about right now. Number one is what methodology did that indicator use? And number two, what assumptions is it based on? So if there's a weakness in the conclusion that you're getting to, it's going to be in the methodology or it's going to be in the assumptions that you accept. So let me give you an example of a weakness in a conclusion. I don't know what I was listening to, but if you listen to All In podcasts, one of the fellows, the science one, Freeberg, he was on another podcast and he was talking about the economy, and he was talking about how inflation, talking about money printing and why money printing is bad. And he used an example um, that let's say that there's somebody selling soda and there's 4 cans of soda and there's only $100 available. Uh, um, that would make each, he made a simplified example saying the economy has $100. There's only 4 cans of soda. Each soda would be $25 because everybody wants this soda that it would be priced at 25. Then he says, now imagine that, somebody came along with another $100. Now there's $200 chasing 4 cans of soda. So that would push the price up to $50. And that's usually the argument that's made to argue why money printing is inflationary. But, and it sounds good. Yeah, if there's $100 and 4 cans of soda, there'll be 25. If suddenly there's $200, somebody just came up with another 100, there's 200. There's still only 4 cans of soda. Obviously, the price would go up. And you nod and you think, well, that makes a lot of sense. I get it. Money printing is inflationary. But hold on. When you're trained in these things, you start thinking, well, what assumption did you just make? You made the assumption that the $100 that was showing up on the demand side and only the demand side. What if that $100 showed up on the supply side? There's nothing saying that money printing is inflationary if the money you're printing shows up on the supply side. So let's say that I observe these 4 cans of pop and I say they're $25 each. The margin is huge because there's just not enough supply. So I go to the bank and I say, I'd like to borrow $100 to invest in a soda a business. And the bank says, okay, well, we don't have any money to lend you. And so the growth in the economy doesn't exist because nobody has any money to lend me. At some point, the central bank is going to say, we need to create more money in the system. So it is going to give the bank, it's simply just going to print money and give the bank $100 of reserves. Now the bank can lend me $100 and I show up on the supply side and I create 4 more cans of soda. Now each can of soda is $12.50, not $25. Do you see the difference in that? When you first hear the argument of more money chasing the same goods, you're making the implicit assumption that the money is showing up on the demand side. But money shows up on the supply side all the time. What if the person who is making 4 cans of pop says, the demand is really there. I can make 8 if I bought this piece of equipment, went and borrowed $100. $100 was created for this person. They bought this equipment. Now they're making 8. That's deflationary. So it's not true that money printing is always inflationary. It only is if you make the assumption that all that money shows up on the demand side. But there's no evidence that it always shows up on the demand side. So you listen to that and you think, okay, well, if you if you had the training, and the training is not just telling you once, it's a way that you look at everything. You look at everything in terms of, whenever you're reading a paper, the first thing you do, even if you are not interested in replicating the paper, is, okay, never mind about all the hypothesis and everything. If I'm going to accept the conclusions, I must accept the methodology. What methodology was used? Number one. And maybe I don't find weaknesses in methodology, which, maybe sometimes you say that's the wrong method for the conclusion you're reaching. You used regression and now you're implying causation. You can't do that with regression. There has to be some kind of time series. That would never get published to begin with. But in every methodology, there are assumptions that are used. You go after the assumptions and you ask, would I accept the assumptions of this? So that's what makes you a better thinker, is that you look for those sorts of weaknesses in arguments first. And then, if you just listen to one person saying more money printing is inflationary, and the Fed is printing money, you'd want to make an inflation bet. But you don't know where that money is going. The Fed printed lots of money from the great financial crisis to COVID. There was QE going on all through that period of time. Where was inflation? The money supply was growing at a rate far faster than the economy was growing. Where was inflation? All right. So that's, when I say it makes you a better, it makes you a better consumer of research, most definitely. Is it true that you primarily execute trades via short puts to collect a premium and or acquire the underlying? Yeah. I'm wondering why it seems that you don't tend to buy calls on securities like TLT. The higher the interest rate, the higher the call price for a particular strike. So you end up paying, you have huge carry with that. At very low interest rates, it's easy to buy a call. It's cheap to buy a call. Go ahead and buy calls. At low implied volatility, it's cheap to buy calls. So you want low interest rates, low implied volatility, buy call. That's cheap to buy calls. The higher the interest rate, the higher the implied volatility, the more expensive that call gets, the less likely it is to pay off, the more likely it is to lose money. I tend to focus on value stocks like, AT&T, General Motors, things like that, because it's something I can live with. If they're put to me, I can live with it. What I don't want is to sell a put on NVIDIA at 1100, have NVIDIA miss, have the story end, and NVIDIA just keeps dropping and dropping and dropping and dropping all the way down to $400, because you are paying for a story. And if that story is not true, there's a lot of downside. With value stocks, you're buying value. That's the point. You're paying for value. Now overlay a story onto value and you've got something. If you don't have the story, you've still got value. You've still got something. So it's just lower risk, I think. Well, lower risk, I know, not just I think. But that doesn't mean I don't buy calls. I do buy calls. Yeah, I buy calls. I buy puts with the intention that I may step into something else later on. Today's level of LLMs and supermodels, how long until financial analyst profession becomes obsolete? It never does. With the finance field, which type of positions you see getting doomed first, if so? Look, you've got some impressive stuff with these LLMs and you think, wow, code can do that. That's pretty impressive. But they are nowhere near ready for prime time. If I ran a model and it came up with some data, I would question the data. I'd look at it and go, but is it true? Is the data true? I don't know that I would just willingly accept it. It can write code, but any dev will tell you that, yeah, it can write code, but not perfectly. You still have to go through and check the code. You still have to go through and trace it. It just saves you a lower priced person who isn't very good writing the code? Why not have the AI write the code? It is right now a lower level coder who's not very good. There is no big app so far that is like, wow, that's incredible. It's all okay, that's pretty good. But you see all the deficits. It still hasn't, I still don't think it, you had this nice leap with OpenAI, and then everyone is catching up to that level, but it's not anything more than that. Somebody used AI to write a story about me, and it was wrong across the board. I read it. I go, no, I never went to that school. I never lived in that city. I don't have these credentials. I never worked for that company. I mean, it was way off, way off. And again, I don't think that these things can do anything more than extrapolate from the data that they have. They cannot depart from the data. So, they'll get there, but this is the stage of euphoria where you start dreaming and thinking of all the things that it's going to change, and the story gets bigger and the story gets longer. And, it's not just, the company's not just worth 3 trillion. It could be worth 8 trillion. No, it could be worth 5 trillion. No, it could be worth 15 trillion. There's no end to how far you can go when you start thinking about all the possibilities. But of all the wild predictions ever made about any technology, none of those wild predictions really worked out. Everything took a lot longer than what everybody thought. The biotech revolution was going to change everything. Well, in time, it changed some things, but it didn't change everything. And it certainly didn't happen right away. The internet was going to change everything, and it did, but it didn't happen in 1999. What you had was a bunch of people rushing to that space saying, there's going to be something here. Let's stake out a claim. Let's stake out a claim. And none of those claims paid out. Well, I shouldn't say none. Many of those claims, 99% of those claims never paid out. And this is what you have now with AI. 26,000 startups that are VC funded at this point. Money is rushing in, staking out a claim, and I think it's just a matter of time before you start, like it was in, once we got into 2000, investors started saying, well, it's been well over a year now. Shouldn't you have some revenues? Shouldn't we be seeing some value from this? You said 4 quarters ago that you were implementing AI to make better decisions here and that it would reduce your costs. Shouldn't we be seeing your costs being reduced by now? So I think, unless it starts showing up, then no. Fast forward 20 years, I think it's going to be great, but not now. Not now. You mentioned you're building out the applied series. I've been doing it for 2 years. Yeah. I'd be remiss if I didn't ask, are you accepting resumes like a young Buffett going to his mentor? Work for free. Well, I could never accept work for free. Anybody good, I would be paying them. So for the applied level, there is a certain way to do the research, a certain way of thinking, and a certain way of getting it done. It's very hard to hire people for this. Not that it can't be done. And I would love nothing more than for 10 people to show up and for me to say, oh, this is great. Is you have to have one foot very deep in the real world. You have to. And you have to have one foot in the academic world because you have to teach this. So you have to understand how the industry works. You have to understand how finance works, how economics works, so that you can understand the relationships that you're finding. And then you have to present it in such a way that somebody who knows nothing about it can watch and go, so then you have to teach it to somebody else. It's hard to find the combination of that skill. You can find, and I have found in the past, academics who say, well, I can help with your CFA side. I can help with questions. I can help with this, but they lack the real world experience to really understand what they're doing. So you look at their output and you say, it's just missing the mark a little bit. I've also had people who had lots of experience in the real world, but when it came to presenting something to a learning audience, it was like you're missing the mark on this one. So yeah, I would love nothing more than for 10 people to show up and build out certain sections for me. I'd love nothing more than that, especially for what I think I could probably have more luck on is somebody saying, listen, I know uh, um, you know, clothing retail really well. I know like all 15 companies in clothing retail. I know it really well. Let me do the sector for clothing retail, and then I'll do the quarterlies because that's going to be a recurring revenue on different sub industries on a revenue share. And they showed themselves to be really good at that. Then I would say, yeah, let's do it because I can't possibly do it all. There's no way that I can do it all. I can do a lot, but I cannot do all of that. That I have to rely on other people. That I have to find people. That's why it's more of a medium to longer term plan that I have. But at some point, it can't all be me. I'm. You could say that what I'm putting into place right now is a good platform for other people to then come and say, I'm really good at this, and I'm really good at this, and I'm really good at that. And then allow them on that base, on that platform to build out what they're doing on that platform. Obviously with the revenue share, I think that is possibly where I'd like to head. But I don't want it to be like it has to be. I need thinking people. I need people who not only know their sector but understand how to make sure other people understand it at the same time. So think about Seeking Alpha. You have some people on Seeking Alpha that you read that are really good at the way that they go from paragraph to paragraph that you're reading and you could follow them. They're taking time to make sure that you're with them all the way. And then there are some that do these big data dumps and they're not taking any time to explaining anything. They know what they're talking about, but you don't know what they're talking about. It's like, well, okay, I see this chart that you've done, but what's your point? Like, what am I supposed to figure out here? You're not taking the time to tell me what point you've made. So there is somebody that I think has a lot of experience with a particular stock, but not a lot of experience in speaking to an audience and getting the audience to stay with them, right? But yeah, I'm more than happy to entertain ideas for how to increase the quantity of content while not giving up the focus or the quality that I'm looking to get. Have you tried or seen other LLMs, AI tools, Claude from Anthropic, Perplexity, etc.? It's I what's the one here that I was looking at? Let me tell you the name of this one here. Where did it go? Is it here or is it here? Here it is. It's called Synthesia. It's where you can write a script, you pick an avatar, and the avatar, who knows, I could be an avatar right now, but then somebody just reads it to you so that you can create, based on a script, you can create dozens of speakers, dozens of people who are speaking. So if I want to give the impression that there is a new voice in the applied series that's going to be focusing on some sector, I could use something like this, write the script, and the person could be speaking. So I've been looking at that. It looks kind of interesting. I haven't really played around with it too much, but yeah, I am looking at other things. I'm not saying that this stuff is worth less. It's just, I don't think that AI is the reality matches the current hype. Did you know your name in Spanish is Marcos? Yes, I did know that. I don't know why I knew that, but I do. Has the majority of your net worth come from real estate or stocks or bonds? Entrepreneurship. Any opinion of one over the other for trying to retire early? Real estate is slow, I think. Retire early, probably equities, I would say, is where you'd want to be. Birkenstock. I have no opinion on Birkenstock. Regarding Theta, should I take 5% of my NAV and keep the 5% in cash? Or just a percentage of my total portfolio, and Theta would then be an extension? Well, it depends on what 5% is. If 5% is $2,500, I don't know that that's enough, but that's going to be enough to do anything interesting with Theta. How much do I use? It's hard for me to tell because I don't calculate how much I use at any particular time, but I think maybe sometimes up to 20, 25% would be margin against short puts. Would you at some point be open to getting zucked? I don't know what that is. I imagine that has to do with something about Zuckerberg, but I don't know what that is. You crazy kids, in your words. Suggestions for best Canadian apartment REITs. Cap REIT, I think. Also, are you aware of any good REIT mutual funds in Canada? No, I'm not. I am not. Can you consider about adding subtitle for the CFA videos in the study program? Not really, because I use the whole screen. So here's my finger at the bottom of the screen. There it is at the top, and subtitles come across the bottom here. But I write all the way to the bottom of the screen, so the subtitles would cover the very writing that I'm doing. You look a lot healthier in Canada. Do I? I think that just might be because of my new diet. Is I don't eat now till 4 in the afternoon. So when I get up, I have nothing to eat right till 4, and I try to eat nowhere past 9:30. If I am hungry after 9:30, it's like a few oranges. Get in that 6-hour window. The reason I do that is because I cannot sleep if I'm hungry, but I do have to lose weight. I was 228.4 today. I was a little over 235 a month ago. So almost 7 pounds. I think that might do it. I've cut carbs out completely, and all my fruit is low glycemic. So I looked at what's on the low glycemic charts, and I said, okay, well, let's focus. Let's try to keep your foods low glycemic as possible. And I cut carbs out. I no longer crave carbs, which is good. It's been 30 days now, so my body should have shifted from being a sugar burning machine to a fat burning machine because my insulin levels are probably lower. So I've gotten rid of that insulin resistance I might have had. So maybe I just look healthier because of the change in diet and being some 7 pounds lighter than I was a month ago. I'm trying to get back to 210 and 228, so another 18 pounds. Yeah. Would Fed rate cuts be solely positive for U.S. home builders? I think to a certain point, yeah. I think the first 100 basis points in cuts would be really supportive to U.S. home builders. I think if you continued to if you saw mortgage rates drop to, 3.9, 3.8, I think home builders would be challenged with a lot of supply coming from existing homes. The lower rates go, the more supply will come from existing homes, right? So the first 100, I think that'd probably be the beneficiary of. Biden could not even complete sentences outside of his base. I don't think Trump is an easy win. Well, it's now an election again, so we'll see. Do you believe Trump incited J6? Well, yeah. I mean, I heard the words. You heard the words. Head on over there and fight. I mean, I think he did. I think if you don't want to use the word incited, he certainly gave permission to behave badly. He certainly gave permission, and when it was happening, to not move immediately and send in the reserves or send in the armors, and to not move immediately is, what were you thinking? You must have been aware of that. The way that guy watches TV, he must have been aware of it. And stories came out after that. Yeah, he was watching it, but he really wasn't saying anything about it. So I think he was hoping that there would be an outcome that favored him. So yeah, I do think he did. Maybe he didn't show up there and lead them and say, come on, get in the fight. But come on. I mean, we all have eyes, right? No matter how much of a fan of Trump you are, you can't deny. I mean, you can't deny that he said words and had no actions as the actions were unfolding. You can't deny that. You might say he was justified. I don't care what you say on that respect, but of course he did. Yeah, of course he did. I'm still going, whoever runs against Trump, I still don't think he will win, even with the poll numbers. I don't know how he can lose at this point. I just don't see it. I thought you sold ABR. I did. And then I heard you had it in your lira. It was in my lira. You can buy and sell in your lira. You just can't put anything in and take anything out. Do you plan to rebuy? Yeah, I do. But I did say this before. I don't want to buy it at a fair value. I want to steal it. I don't want it at a fair value. Now, when it was falling, it fell past 13. It fell into the 12s. I thought, okay, let's get ready here. If I start to see $11.50, $11 pushing down there, then I'll start to re-add it to my lira, which would require me getting out of some cap rate. But ABR went up on that whole GameStop short covering, got out, bought cap rate down here. Cap rate has gone up, ABR has come down, so maybe I'll jump out of cap rate at some point and jump back into ABR. I'm just wondering what that green, you see that glow going on in the corner over there? I'm just wondering what the hell that is back there. Oh, you know what I should do is turn on the light. There we go. It was starting to get dark in here. Yeah, turn on the light. Yeah, so I did fairly good on that so far. Now, I just want to squeeze a little bit more out of ABR before I sell it, and I'd like to see cap rate before I sell it. And I think ABR might have a little downside, unless on the earnings call they can totally get rid of any issues. I think they might have a little bit of downside at this point. I'd like to see low 12s. If I see low 12s, mid 11s, yeah, I'm back in. I'd like to see a cap rate go above 50, ABR down to 11, get out there, go in here with the Canadian dollar strengthening when I do it. I'm not asking for much, am I? I'm not asking for much at all. Can you discuss why Japan has seen such stagnation after once being considered the next economic superpower? Aging population and a xenophobic policy on immigration. They don't want immigration. Japan is for the Japanese. Period. End of story. Japan is for the Japanese. And because they have low birth rate and a shrinking population, and a very old population at that, which has a lot of entitlement associated with it, unless they have immigration, all they can do is get smaller. And so That is what's going on in Japan. The US is in the same situation. They don't have the birth rate to justify the economic growth that they want. They simply don't have it. They have no choice but to solve it with immigration. And if they decide to go the way of Japan and become very xenophobic in that sense, then they will go the way of Japan. Are we going to see the junk rally like in 2009? Why are mega caps down in recent weeks despite having fortress balance sheets? Are we going to see junk rally like in 2009? Well, look, it doesn't matter if they have fortress balance sheets. It's valuation. It's what are you paying for what you're getting? It does not matter what their balance sheets look like if you're paying 50 times forward earnings. Have the strongest balance sheet in the world. It's your valuation that sucks. You know, I got great doors in my house, but if I listed my house for $10 million, it wouldn't sell. And I could say, well, but why not? I've got a fortress door back there. You're not getting in. I spent a lot of money on that door because it's not worth $10 million. So some of these companies, their valuations have become so elevated that they simply weren't worth it. So I don't know that I would just look at their balance sheets and say, why are they selling off? They got a lot of cash. It's like, well, how much are you paying for each dollar of earnings? What do you think about global ship lease? I'm working on that one now, actually. Yeah, I'm working on that one now. I've gotten about halfway through. I'm just at the financials to finish that up. Container shipper, smaller container shipper, mostly time charters. Good margins. It's not your big guy. They're playing in, like with container shipping, the amount of ships that are coming online in the next couple of years are significant. It is a more consolidated industry or segment than dry ships or tankers. I think the largest player is 20%. Oh, I got a housefly in the house here. Largest player is 20%. You don't have that in dry bulk or tankers. And I think of the three, dry bulk, tankers, or container shipping, I think container shipping is most exposed to tariffs that would reduce the level of trade, because tariffs are usually on consumer goods, or usually on either intermediate or consumer goods, not really on energy or iron ore or grains or anything like that, but usually containerized cargo. So I would be uninterested in almost any container shipper at this time. In fact, I think the whole shipping sector is probably a short, because for it to be a long position, you would have to tell me what else in the world could happen to make shipping distances longer. Got to go around the Panama Canal for the most part. Got to go around the Red Sea. Got to go around the Suez Canal. Got to avoid certain areas that have increased in piracy. You have the longest shipping routes that you have right now, and you have global growth that is it's not that great. And you have fleets that are increasing in size faster than the demand for capacity is increasing, at least for the next 2 years. All that can happen really is the problems in the world get fixed. You know, you have La Nina switching to El Nino this fall, which brings a lot more rain. So water levels in Panama may increase. And what if peace breaks out in the Middle East, right? And then you can travel the Red Sea and Suez Canal again. Well, that would shorten distances. And if you shorten distances, you are actually raising supply capacity. So for me to think that there's a leg higher on freight rates here, what else can go wrong in the world that would lengthen shipping routes? What else could go wrong? Right? So for shipping, I think it's as good as it gets. This is the best thing that you can hope for, is longer routes if you're a ship owner. because your charter values are up, especially for containerized freight. Your charter values are way up. But if you're buying them, you got to think that they're either going to stay elevated for a long period of time or go even higher. I can't make the higher argument because you would have to tell me what else can break, right? And I don't see it. Is it a value trap? I think so. I'm holding 500 ABR. Similarly, I have GM, NEON. You have currently 181,000 subs and around 8,000 views per market update per week. Won't you move stock maybe 1 year from now? I don't think so. Listen, if these were penny stocks, yeah, I would. Not only would I probably be moving them, I would be looked at very carefully if these were penny stocks. If these were micro cap stocks, maybe I'd be looked at. It depends on what I say. But these are very large cap stocks with 181,000 subs, which many of them are not active, and 8,000 views per market outlook on a large cap stock. I am not moving anything. I'm not moving anything at all. It would be hard to make the case that I'm moving anything. I don't think I am. No, I don't think so. It would be nice to think that I am, that I'm important enough that I can cause something to happen. But no, I don't think that I'm responsible for even a penny of the move that you see in some of these stocks. Set level 3, August 17th. Oh, set level 3. Oh, yeah, okay. You're set for level 3 on August 17th. I completed 485 out of 1020 practice questions, 76%. As a non-native speaker, I struggle with writing essays quickly. They're not essays. They're not essays. That's the point. That's why you're struggling. They're bullet points. And every answer is no more than 2 bullet points. 3 if you don't have the language, but if you're writing an essay, you're wrong. These are not essay questions. These are structured responses. There's a specific structure to the answer, and that's it. The longer the answer, the more difficult it becomes to assume that everyone can get the same answer. It must be a short answer. Any ergonomic tips on what setup you use for work and research? Yeah, that can be that can be troublesome, right? I think the ability to, at least for me, the chair that I use, I'll just show you. It's a very hard chair, right? It's a very simple, very hard chair. So there's not a lot of padding on this chair at all. It's a very solid chair. And the arms go under the desk as opposed to hitting the desk where you can't get any closer and you always have to hunch forward. I can bring the desk right up to my stomach, so my arms are sitting right on the desk, so I don't have to do very much. And I sit low so that the way I write is my arm is right at the level that I like to write. And with that, I can usually maintain this for 2-3 hours without a problem. Really soft, big chairs, just there's no support, especially if you're sitting way back in the chair. If the arms don't go under the desk, if you can't get right up to the desk while you're writing, at least for me, that's a bit of a problem. Yeah, I had a hard time for years trying to get comfortable with extended periods of time of reading and research. I had a hard time with that. So this chair here, it's a cheap chair. I think I only paid like $300 or $400 at Office Depot. It's not like a $1,200 chair. I've gone through, I don't know how many of those, and for a day or two they're good. It's like, no, I don't like this. No, I don't like that. A nice, simple, easy chair. And how I found it is, went into Office Depot while somebody was looking for something. I said, I'm just going to sit over here. And I sat in one of the demo chairs and I thought, this is actually pretty good. So I bought one and it's been great, but it's slowly wearing out and I got to get another one. And I went back and they don't have any more of these. So I'm going to be back into that endless loop of buying all these chairs that don't work. If you have 1 million subs, how should you think about the positions you put on Sunday? It would be difficult to have 1 million because I will be taking new positions off the market outlook, and it's only going to be in the applied level, which means you need access to it. It would be difficult to have 1 million on a paid site. That would be brutally hard to do. Not without huge marketing and huge staff, and a much broader value proposition. What I'm doing is very specific, and it is a more educated audience that you would have. There are few. There are a few in that category. It's not the big category in the market, right? So I don't think that I would ever be in a position to move things. You mentioned your 5-year coma trades. China's exporting cheap hybrid plug-ins EVs to developed markets, and the US is exporting cheap energy. Why isn't XLE part of your 5-year coma trade? Why would it be? Energy. XLE is primarily carbon-based energy. You just said in your first sentence, China's exporting cheap hybrid plugins and EVs. Wouldn't that reduce the need for carbon-based fuel? I'm not that. If I'm in energy, I want to be in energy production. I think that I don't know that it's going to be carbon-based energy demand as much as it's going to be terrestrial-based electron demand, which means you need a utility. I think the utilities are a better place to be. Not that I'd abandon XLE, but I don't know. Not really anything that I see in there other than here and there. But when I say a 5-year, something I'd be comfortable for 5 years, what I'm saying there is that's high conviction. I still do things with energy players in that space, but I wouldn't say they're high conviction. They're high conviction for a period of time, but I don't know that I would put a bunch of money in and then go away for 5 years. Would you go long small caps for a cut in July? Small caps do respond better to lower interest rates than higher interest rates. So if you do think it's not just a matter of a cut, you must be on a cutting cycle, which means one cut is followed up by another, is followed up by another, is followed up by another. Then yeah, I think that is a sustainable tailwind for small caps. But the idea of rate cuts, small caps rallying in front of the idea, is not the same as rate cuts. One rate cut is not the same as a sustained run in rate cuts. You get a rate cut in July, and the Fed comes out and signals that the data is here. We're going to start cutting, and that they're going to be more. Then yes, then I think that you have a good fundamental reason, not just a sentiment reason, but a good fundamental reason for small caps as well. Increase in U.S. oil production be related to the decrease in inflation we've been seeing. Anytime you increase supply, you decrease price. Right? That's pretty standard. But no, I don't think it has to do with the deflation you're seeing. Maybe on a headline basis, but certainly not on a core basis, because that is stripped out. Let's see. Home stretch for level 3 next month. Motivation to make this not my second last exam. There you go. Good. Any plans on more philosophy or poem videos? They're not so much plans as desires. Yeah, I do want to do more. But every time I think, okay, let's do something, something else comes up, and it's like, well, let's just get this out of the way first, or let's do that. Right now, until I think August 10th or 11th, it's live sessions for level 3 almost on a daily basis. Um, there are live sessions. So that's sort of a priority. Plus, I have to get some level 2 content done for the CFA side before I think the end of the first week of August. So priorities just show up, right? VFV is a Vanguard version of VOO representing S&P 500. Then what is the equivalent of TLT denominated in CAD? I have no idea. No idea. Could you just talk about a real estate sector in the city that that was odd. Can you talk about real estate sector in a city? The government acquires most of the land and realties. What do you see as the future of such cities? Well, I mean, the government, you got to be more specific than that. You got to tell me what's going on. Government acquired a lot of the land. Why? What for? What are they doing? If they own everything, what's left to own? What are they doing? Are they building a nuclear waste dump? Then no. No. Are they building another Pentagon? Then yeah, that would be great if you can get some real estate to build houses on. So what are they doing? Where is it? How much land have they got? How long are they going to do it for? So many questions. Thank you for all your kind. One of the best took tax lawyer. You're a tax lawyer, and you prefer a mix of people in this world. Your preferred mix of people. Tax lawyer, and I haven't had too much dealings with tax lawyers. Maybe that's good. Maybe that's bad. I don't know. Are you able to click on the comment you're responding to highlight it on the screen? Let's see. No, I can put the user in timeout. I can hide the user. I can add as a moderator. I can remove it. I can report it. No, cannot click on it and have it on the screen. Oops. Since GM stock is nearing its record high, not its record high. I think that was set 2.5 years ago. It was a little peaking over a little $60, 52-week high. It's certainly doing that. That affect your short puts? Will you keep selling puts? Yes, I will. I sold puts last week on it. CFA level 2 in August. Do you think 25 days is enough for revision? Yeah. I've done ESEQ questions almost half of, yeah, I think that's enough. Any advice on giving presentations? I to get extremely nervous. Most people do. Voice shake and tend to lose my focus and prep. I have similar experience with test taking too. It's nothing but practice that can do that. You tend to get nervous because you think you're going to say something embarrassing, or you're going to say something stupid, and everyone in the audience is going to start pointing at you and pointing out that you don't know what you're talking about. So there's always this fear that you're going to get called out for something you didn't prepare well enough for. So you over prepare, and then you got too much to say, and then you ramble on. It just comes with practice. Speaking to an audience of people just comes with practice. I don't really, when I'm in a class, I don't really look at any one particular person. I sort of just look above their heads when I scan the room, because it's mostly the hands up you're looking for. And, like if they're just doing this, I'm not going to see them. And if you're afraid to ask a question, say, sir, come on, let's get that hand up there. It's just practice. It's just the more you do it, the easier it gets. But it's hard to tell somebody not to be nervous, and it's hard to give somebody the confidence not to be nervous because you know you can't give confidence. Confidence is something that you have to come by yourself, and that only comes with practice. But I would say, um, and it's hard advice to take. Just relax. Just don't fill your PowerPoint with a whole bunch of words. Don't stand behind the presentation thing and try to hide. Everyone likes to huddle and hide behind the presentation stand. Get out there, have your automatic thing that flicks the things open, and just have a comment. If you know what you're talking about, just talk. No one really pays attention to you unless you are visibly nervous. Then people feel bad for you. But hopefully there's somebody in the audience that will recognize that and save you. And usually saving you is by asking you a question very early so that you're now only talking to one person. And we'll ask you, normally what I do if I'm in a presentation, somebody's nervous, is I'll ask them a question early, and I'll ask an easy question that I know that they have the answer to, which boosts their confidence. And after they have a one-on-one dialogue of something that they can handle easily, off they go. So maybe put somebody in the audience, and in the first 3 or 4 minutes, have them ask you a really easy clarifying question about slide 2 that you can handle very quickly, and that will build confidence in you. Here's a fun question. I'm thinking of buying a guitar. How do you personally determine whether a luxury item is worth the opportunity cost of giving up future investment returns on the money? Well, you got to live. I mean, if you can get into an endless loop of I could spend this or invest this, I could spend this or invest this. At some point, you got to live. At some point, you got to have some fun. Go ahead and buy your guitar. Who cares? I mean, who cares? If you were 75 and you had $150,000 left to live on, and you were going to live another 10 years, which is going to be tough, and you said, I'm thinking of buying a $5,000 guitar, I would say, well, look, those days are far behind you. Where do you think you're going with that? You can't afford it, but have fun. Go ahead and buy stuff. It's not a big deal. Buying a guitar is not a big deal. Thoughts on the future of the housing market in Canada? Challenged is a good word. Undersupplied. I think we'll continue to be undersupplied for a number of years. How should we think about regulatory risk while investing in equity market? Well, what regulatory risk would you be concerned about with equity markets, especially small caps? You're going to have to point out what regulatory risk you're concerned about. Currently invested in U.S. energy battery stock, reaping benefits of IRA. Oh, I see. If regulation helps or hurts the equity that you're invested, it's hard to answer that because every industry has their own regulator, has their own regulations that have to be complied with. Every industry has that. Might go away if Republicans come into power. Yeah. Company enjoys tax credits and thus makes the margin profile very interesting. Well, that is a risk. At least you identified the risk. At least you are aware of what the risk is. So if there is a chance of a Republican win, you've identified that there is a chance it goes away. So the more you become convinced it's a Republican victory, the more or the less likely you'd probably want to stay invested, or the more likely you would be to sell calls on your position. Interesting to see market pricing that outage to CrowdStrike immediately by shorting the stock, especially since you could argue it didn't affect earnings. Traders needed to make a move. Not sure where that's going, but have a look at Micron, lady. 114 appear attractive at 24 times forward. I haven't looked at Micron lately, no. Try to buy organic. Lots of sprayed and GMO stuff out there. I don't really care too much about the GMO. I mean, I don't think that's an issue. I don't care much about the GMO. The sprayed stuff, I wash everything. How do you decide whether to just sell puts or create a synthetic long position? Depends. It depends on what I'm looking for. Let's say that I want to own a stock in the US. And this is the synthetic was more when I wanted to avoid US withholding, still do. But let's say that the stock pays an extremely attractive dividend. If I buy the stock and get the dividend, being that I'm not in a tax treaty nation anymore, I'd lose 30% of the dividend. I don't want to give that up, especially if the dividend is 6-7%. I don't want to give up 30%. So using a synthetic means that I have no US dollar exposure. All my dividends are now going to be given to me as a capital gain because the continuously compounded dividend yield becomes the deduction from the risk-free rate in the calculation of the prices of the options. So you are bringing in the dividend yield in the price of the options, and if you do a synthetic on a stock with a nice dividend, you're going to get paid money up front. That is the present value of the dividend, pretty much, that you're going to be getting. And then you don't have to take on currency risk. So if the target stock has liquid dividends out for like a year and has a high dividend yield, then yeah, I'll do a synthetic. Your thoughts on Tesla would be nice too. Down 4%. 4% is nothing for something that really, in my opinion, is a $30 to $40 stock. So having it at $240 is still $200 below what I would think is fair. Earnings report this week. I'm so tempted to say things, but I'm keeping quiet. Well, look, they had what's going to be focused on is adjusted earnings, not the as reported earnings. It'll be non-GAAP earnings that'll get the focus, not the GAAP earnings. They did cut their staff 14%. Well, at least that's the number. They did sell more vehicles in the second quarter than what the low estimates were. Although let's keep in mind, they still sold fewer in Q2 2024 than they did in Q2 of 2023. California registrations for June show a big drop in sales of Tesla in the state. Same with registration data from the EU shows a big drop for Tesla. There is more data coming out, more information coming out, supporting the idea that Tesla buyers were primarily liberal, were primarily Democrat, were primarily progressive, and that his shift to supporting Trump is alienating the very customer profile that he had. That the Trump camp are not big EV buyers. So he might with the we don't know what kind of price concessions were given overall to move those vehicles. So we're not going to know what the margins are. I don't expect them to be much better than auto industry margins at this point. But he might make it on the bottom in terms of expenses. He might make adjusted earnings on expenses. Battery storage had a good quarter. Primarily from one big customer. They landed another really big customer. And when I read it, I thought, well, that's pretty impressive until you read that, oh, hang on now. It's over 5 years. So when you look at how much it is per year, it's like, well, yeah, but that's really nothing per year based on where they are in terms of where they're selling. That has 25-point margins, much better margins than their car business. But you have 5% of their revenue at 25% margins and 95% of the revenue at, when it's all said and done, 5.5% margins. Maybe they can get 7 or 8 points with the staff reduction that they had. But I think it's going to be, I think he's gotten the sort of the message from his shareholders that if I don't have anything to show you today. Let me tell you what I'll have to show you tomorrow. So I think that on its own, earnings will be, earnings won't support the price. I don't think earnings will support the price. But if you have adjusted earnings coming in 1 penny higher than expectation, given the willingness of the shareholder to just believe you could have a $50 pop in the price of the stock, just because it will be, whatever reaction there will be unhinged from the fundamentals. It'll all be sentiment. But I'm sure he's going to take the time to talk about this wonderful future of robo-taxis, which will not happen, by the way. I don't know of a single a single person that is knowledgeable about that stuff that thinks it's going to happen this year or next year or the year after or the year after that. It is years away from happening. Their interventions, at least their reported interventions for their driverless stuff, is shameful compared to Waymo and what Waymo's interactions are. Like shameful. What Tesla would have to improve almost 4 times just to get to where Waymo already is, because they did a national focus and then trying to get it down to the street level, whereas Waymo did a small focus and is moving outwards so that they have much fewer interventions. If you're looking for robo-taxis being a thing of the future, Google should be a $5 trillion company. They already have a robo-taxi. They're already generating revenue, and they can sell their software to every car manufacturer without worrying that they're going to compete with the car manufacturers. There's a reason Pepsi got rid of its restaurants. Pepsi got rid of its restaurants. Yum Brands has them. Pepsi got rid of its restaurants because Pepsi couldn't sell to any other restaurant, because they would say, why would we buy Pepsi from our competitor? Right? So that's why they got rid of the restaurants. Tesla is a competitor to all these vehicles. So Tesla is going to have this stuff on their own vehicles. How are they going to sell it to all the other car companies when the car companies say, why would I support the cash flow of my competitor that wants to crush me? They're more likely to go with Google. But that's not going to stop Tesla from, I think, really pumping this robo-taxi thing, really pumping the idea that you can have an Optimus robot in your house. It's just around the corner. I'm sure that a lot of things will be promised for Q4 later this year or in the first half of 2025, of which will never happen. But it doesn't matter. I think he's figured it out, that all he has to do is say it and the stock price will go up. I think his intentions are to deliver on all this stuff. I think he's just really aggressive on the timeline, and has figured out that it is in his best interests to promise a whole bunch of stuff, and his followers never question him. Even after how many years of it being promised, never question him. So it's one of those ones where it's a hard one to play, because what if earnings do suck? You could still imagine a scenario where the investor says, it's not a car company. Who cares what the earnings on the car company? It's not a car company. It's an energy company. It's an AI company. It's a robotics company. It's not, they'll just keep saying it's not a car company. 95% of your revenues come from cars, but somehow you're not a car company. It would be like, McDonald's with self-checkout and using AI to figure out what you want. And the shareholders saying it's not a fast food restaurant. It's not in the food business. It's in the AI business. It would be just as ridiculous, I think. But I don't know that there are more divisive stocks than things like MicroStrategy or Tesla. For those that believe, they believe, period. And you cannot change their mind or shake their faith at all. I think that some people who are long do recognize that this has nothing to do with the fundamentals of the company. It has to do with the psychology of the investor. So on the earnings call, don't look for, I think if you're looking for direction, I wouldn't look too much to the fundamentals. I would look to what he's saying for the psychology of the investor and go along that. Is the 440 applied level on the website the all-included version? Till July 31st, correct. The inverted curve lasted for more than 600 days before the 29 crash. We are more than 600 days now. Where's my spreadsheet? 746 days on the capital market inversion, 629 on the money market, the capital market inversion. Both of them more than 600 days. Certificate of quantitative finance. You hear stuff, and I think my eyes have come across this before, but I didn't look into any of that stuff. Thoughts on mortgage lending companies? Will these companies benefit from future lower interest rates? Yeah, they will, because they're not using all their own money. They're going to be borrowing. They're going to be pledging. Well, first of all, when you say mortgage lending companies, are you talking about companies that hold a book of mortgages, or are you talking about originate and sell? If it's originate and sell, their fortunes will be tied to the level of mortgage activity, which would increase with lower rates. So most mortgage companies are probably originate and sell. What is your take on going long duration and small cap to reflect bullish view? Well, I would go long duration to support a view on lower rates. That does not necessarily have to be a bullish outcome. You could have a global crash in credit markets, the economy in the tanker, equity stocks tanking, and central banks will bring those interest rates to zero. Duration will do great. I don't need a bullish economic scenario for duration. Small caps, yeah, I would need both. I'd need rates going down and the economy strong. What about a straddle between the days of elections or with Biden stepping down? I don't know what you mean by a straddle. A straddle on, I mean, why? Pick a direction. No, I wouldn't pay for a straddle. Would the banking sector and credit card companies outperform during rate cuts? Typically, due to guaranteed income from refinancing and increased spending from consumers and business, increased borrowing. Yeah. You still holding your ES 5675 puts? Yes, I do. Yes, I do have them. Let me see. Oh, again, I'm in the wrong account. I'd have to get my phone to key in the code to switch accounts. Yes, I do. If so, how long do you think it will continue for further downside? Further downside, I think we're already bouncing on the Democrat trade, which is the counter Trump trade. Where are we on ES right now? Looking at futures. ES up 10.5 points. Trying to keep some elevation. Started off strong. Got to 55.74. We're 55.64. I'm not, day to day, I'm not concerned on these things. Metals, I think, are probably a better play on the economy than the S&P. Gold up, palladium up, silver up, platinum up, copper up. Yeah, they're nice. It's hard to tell looking at markets at night, especially Sunday night. Usually the Asian market means nothing for futures. Even the European session means nothing. You really don't get a feel for how the U.S. session is going to do until the Americans start showing up at 6:30, 7 o'clock in the morning. That's when you start to get some direction on where the U.S. markets are going to head. So there used to be information in the futures at night. Now it's like, what do you think about the consequences of stealing Russian assets for U.S. and EU capital markets? Well, what is being stolen depends on what side of the argument you're standing on. On one side of the argument, you can make the case that you stole this from me. On the other side of the argument, it would be like, no, we confiscated it from you because of your behavior. You owe it, and we confiscated it. So one person's confiscation is another person's theft. So, I think it's well. I don't know what to think about that one. I think the hope is that they can wait out Putin, that his cancer will take him down, if that rumor is the right rumor, which seems to be wide agreement that he does have some sort of cancer. So I think they just want him gone. I don't know if what they're doing is the right approach. I mean, I don't know. If Fed cuts rates, does that cut the rates broadly across different yield to maturity bonds? No, they cut the overnight rate, which would then be reflected in money market rates very quickly. And then the interpretation of what that means would then reflect out into capital markets. But but yields would come down across the board, but not all by the same degree. Curve normalization generally happens by short-term rates dropping at a faster pace than long-term. Correct. Could you please tell if subscription to the applied level ever expires? No, it doesn't. When I say it's a lifetime access, it's not your life, it's my life. If I die in 12 years, then it's over. Unless I have a whole bunch of people in place that continue contributing to it. But I mean, let's say I get shot tomorrow. Well, it's over. Still a lot of good data. There's a lot of good information there. There's a lot there. I mean, for what you pay, you're getting a lot already. But I mean, if I get shot tomorrow, then yeah, it's over. But I'm not in the U.S., so the chances of me being shot are much lower. Maybe I'll warn you when I'm traveling to the U.S. So you can then be on alert that the risk of the applied level is higher. He's in the U.S. Bullets flying everywhere. I have a question on private investments. MOIC is 2x in 10 years. Multiple of invested capital. 2x in 10. Okay, so that's about 7% a year. Can we assume that would be equivalent of weighted return of around 7%? Well, that is what it is, right? If so, what is the appeal for privates? So I don't know that you can do it based on a time-weighted return. So most funds have a 10-year life. You're saying 2x in 10 years. There might be like a 6-month to 1 year call down. And then there might be distributions from maybe like year 6 to year 10, where you get your last dollar in year 10, that over the life of the fund, you got 2x of your invested capital, but you have to look at it based on a time basis. So usually the return on funds like this is based on the internal rate of return, as opposed to a time-weighted rate of return. It's an internal rate of return because it's all money-weighted, and an internal rate of return is a money-weighted rate of return. So the money weighted rate of return might be significantly higher than 7%. If you drew down over a year and then from like year 6 or year 7, you started getting your money back, you would look at the timing of the distributions in and out to determine what your return is. To what degree do you think corporations influence or control government? To a necessary degree, I think. To a necessary degree. You're a government official and you say, we're going to regulate this. And I think, but you know nothing about my industry. You have no background in my industry at all. You're just saying something, and I don't think that you're well informed enough. So I will have a representative meet with you and say, well, what you're proposing is going to have these consequences. Are you willing to accept these consequences? Because I'm in business to maximize the return for my shareholders. And if you're going to do something that threatens that, I'm certainly going to educate you as best I can. So I think corporations do get things done to a necessary degree, right? To a necessary degree. Now, will some people abuse that power? Sure. But go to socialism. Will some people abuse that power? Sure. Go to communism. Will some people abuse that power? Sure. Just because you see crime, financial crime in capitalism, doesn't mean that financial crime is endemic to capitalism. It's endemic to human nature. Doesn't matter what system you have, you're going to have that. So you can say capitalism is a bad system, but it is better than all the other bad systems. It's not because capitalism is a bad system, it's because the humans in capitalism are bad. But if you had socialism, you'd have bad humans, just different humans are being bad. If you had communism, you'd have bad humans, just different humans are being bad. At least with capitalism, you have an equal opportunity to be bad. If you think about it that way, that you yourself can be bad if you choose to, but in socialism or communism, unless you are in the party, there's not much of an opportunity for you to be that bad. So it's not equal opportunity badness. If you had to choose another bet aside from Canadian REITs, copper, utilities, park your money for 5 years, what would it be? $30-year bond, 30-year U.S. Treasury. What is our rate on the 30-year right now? 30-year is 4.45. I'm locking in 4.45 with a really big duration. And I think the long-term place for rates are simply just lower. I would take that with the instruction to continually reinvest the coupon into more duration. In fact, I'd probably try to find the highest duration strip I could and load up on that and say thank you. Because it'll have the biggest duration with no distributions, so no withholding tax on that whatsoever. And the ultimate end with all this debt is politicians aren't going to stop. They're just going to want it to be cheaper. Make it cheaper, or like Argentina wants to do, get rid of the central bank. At some point, you just get rid of the central bank. Period. Just get rid of the central bank. Right? Yeah. So I'd probably do that based on that. Sure. What is the tax on capital gains on stocks in the U.S. for a Costa Rica resident? 0. You still have to pay the U.S. on a capital gain? No. As a CPA, I support this message. That must be the comment I had about good and bad CPAs. Dated a girl from the big 4 accounting firms, astonished to find out they have no idea what they are doing. It's all about the social event at the steakhouse. Yeah. I've seen that firsthand with the accountant, with the switch I made to Grant Thornton. The woman that was doing my taxes, just no clue. Like, really, just, I mean, I did my own personal tax return, and it was so very different. She did it and said, "Okay, you owe this much money." I thought, no, that's not true. Come on, enough is enough. So I did mine. Turns out I don't owe anything because of the deductions I had that year, and where I placed my income. Turns out I was okay. And it was like, but this is, you're just taking numbers off statements. You should know this. No, and the delays and the way, and to be ignored the way I was ignored. You send in an email, no answer, no reply at all. You send in another one with your question. I finally had to send one saying, "Look, I'm sick and tired of being ignored. You guys with your billable hours, whatever strategy you think you're running, I urge you to rethink that because this is wearing out very quickly." But I cannot recommend them at all. Just far more interested in their billable hours than they are in actually doing anything. My God, it, like, starting in November, really getting ready for this and not done till June, and having to remind them again and again and again and again that something needs to be done, and almost nothing. And millionaire billing. Oh, this guy's got it. Bill him. Every month you get a bill, billable hours. For what? For what? Getting ignored the whole time? Right? So it was disappointing. I'd never use them again. I think they're aware that I would never use them again. I didn't have to say it. I think they're aware of that. But yeah, all the accountants, there's so many accountants being produced. They all can't be good. Right? Any tips on essay questions for level 3? Yeah, attend on the site. We have drop-in sessions that start next week, I think. Attend as many of those as you can. I don't understand the subdues. Do you plan on including financial modeling in the applied series? Yeah, to a certain extent. I don't think it's very useful for the retail investor, but we'll use a financial model that was created by Aswath Damodaran, which I think is a good model. I think it's overkill, again, for the retail investor. Massive overkill, I will say that. But we'll use that. Not that we'll just take it and start using it. What we want to do is replicate it. So to say, okay, well, if you had to build this, how would you build it? Once you build a financial model, then you can do any company you want. But it's important to see how you would build a model. Where do you put all your assumptions? What kind of relationships are you mapping out between the different accounts so that you understand how they're built? I think that's the lesson, is how would you build one? And to build one, it's just taking an existing one and replicating it step by step so that you then, when you're done, you've built the very same thing. I think that's probably the best way to go. And then you're ready to, when you're building it, you'll see what list of assumptions you would have. You'll see, well, I need an assumption about revenue growth. I need an assumption about margins. I need assumption about the relationship of working capital accounts to my cost of goods sold. I need assumptions about the build in my fixed assets so I can calculate depreciation. I need assumptions about the amount of CapEx. And you're saying, wait a minute here. Am I not just guessing at everything? Yeah. Welcome to forecasting cash flows, where it's just one big giant guess. Everything is a guess. What's your best guess? Now, of course, it's informed by history to some degree. It's informed by your analysis of the company and your belief on what the environment is going to look like going forward. But your belief on the environment going forward is another big pile of guesses. Everything's a big pile of guesses. Why do we do it? It's because whatever price target we come up with is based on all these guesses. So as real information starts coming out, we could say, well, that's better than my guess. That's better than my guess. So I'll raise my price target. This is lower than my guess. This is lower than my guess. That would lower my price target. So at least you would then say, this is supportive of the stock, this is not supportive of the stock based on the assumptions that you made. If you put 10 people in 10 different rooms, give them a yield curve and a bond, they'll all come up with pretty much the same price. Pretty much the same price. Do that with a stock, you'll get 10 different numbers. 10 different numbers. Because it's all just guesses. All just guesses. Would TLT still be a good trade if the US credit rating gets downgraded? Yep. Wouldn't this increase yields? It hasn't yet. Twice in the past, it's been downgraded. It affects yields for a short period of time, and then yawn, we move on. The market has a very short memory. We move on. In 3 weeks, 4 weeks, the market will forget that ABR is being investigated by the DOJ and the FBI. It'll be like, well, unless you hear something more about it, it'll just fall in the background and yeah, blah, blah, blah. Let's move on. Level 2, CFA 2024. All new readings are covered by Mr. Richie Owens. Did that mean from next year onwards you won't be covering any new chapter? I am doing something in the alternative investments. I think it's a real estate reading that I am doing. Only because I probably am the best one to do anything associated with real estate. But yeah, on a going forward basis, any new readings in level 1, it's doubtful that I would be doing that. Any new readings at level 2 on a going forward basis, it's doubtful that I would be doing that. I mean, I did sell the business. At some point, I do have to move on, right? At some point, I do have to say, look, here's the transition period. I'm handing it over to you. It's in good hands right now. I don't see that it's in bad hands. It's in good hands right now. And at some point, I gotta get off the stage. Let other people onto the stage, right? What percentage should we invest on each trade when you sell a put on T, for example? How do you determine the size? I don't really want to exceed, if a trade is 10% of my portfolio, I don't want to do that. But I got big numbers, right? When I started way, way, way back, there was no way that I could say, oh, I can't be more than 10% in one stock because, well, what could I buy? 2 shares of this, 3 shares of that, 4 of this. I mean, when you first open your first account, you think about a stock, you say, well, I can afford 300 shares with this money. That's it, 300. When you have small accounts, you tend to have very concentrated positions. It's a function of your capital. You can't diversify. So my strong suggestion for anybody who has small accounts, who's got to be 100% in one thing, is use ETFs. At least you have a diversified portfolio. You can use a sector ETF and you can say, well, okay, utilities, I'll buy XLU, but with XLU, I've got how many utilities and companies in the utility space. At least use ETFs and now you have diversified portfolios, even though you only have one thing. But to load up on one stock, you got to be right. It's got to go up. Because you don't have diversification, you have beta and a huge amount of idiosyncratic risk. It's got to go up, right? Cover nuclear uranium mines next in the applied series. Yeah, I'm getting more and more. I think it's either that or cybersecurity. Biden just dropped out of the race. Well, I think you're behind the game a little bit. This was way earlier in the day. What are your thoughts on HR.UN? Retail. I'm not a big fan of the retail space or the office space. I think HR is retail. I think they have some office space. PMZ was a spin out from HR. HR had PMZ and it spun that out. Or it spun out some properties that then became PMZ.UN. It seems that PMZ.UN is far more stable and less volatile than HR, so that seems odd that they would spin out That was just the low volatility non-core stuff that they spun out. I haven't paid too much attention to anything beyond apartment REITs in Canada. Would the Fed need to drain liquidity out of the system before it lowers rates? It has been doing that. It's still doing that with its balance sheet runoff. Giving RRP and reserves are still at an elevated level above the ample amount. Yeah, but it is doing balance sheet runoff at this point in time. If you have lower rates, the thought is that you can get faster runoff from the MBS side of things. How do actual historical returns compare for equity versus risk-free rate government fixed income? Equity is outperformed. Specifically, what is the longer-term return considering times when equity does over long periods of time? Equity has outperformed. Well, when you say outperformed, can't say it outperforms. You're taking on more risk. It better outperform. Equities has had the higher return series. If you look at it in terms of a dollar invested 50 years ago to today, equities, hands down. How can I learn deal sourcing and partner with my client without prior PE experience? I do PE investment research for a high net worth individual who wants to partner with me despite my lack of industry experience. Well, you need a source of deal flow. You need to figure out, like, what are you investing in? Private companies? Or you're certainly not taking public companies private. You're probably investing in private companies. Are you investing more as a venture capital? Are you hoping to buy the whole company and just simply own the company? And if so, what space are you focusing on? So, for deal flow in the venture capital space, you want to be in an area where there are more venture capitalists, because that's where the ideas show up. So saying let's invest in private businesses is one thing. A different thing altogether is what's the source of the deals you're going to find. Like, where are you going to find deals to invest in, right? And if you're not going to find deals to invest in, why not just invest in a PE company that then invests in the deals themselves? Why not invest in somebody who has access to deal flow? There are only 134 people here. I like your thinking. Yeah, it should be higher, but the types of questions that show up and the types of answers I give, it is a more enlightened crowd that show up for these sorts of things. Many people won't put in the thinking that's necessary for this type of content. So, the further you move out into the right tail of the distribution in terms of ability, in terms of willingness to think on a more complex level, the smaller your audience gets, but you are in good company. Are we ever getting hats again? Yeah, but it's going to be the A on it this time, not the M, because I don't own the M anymore. But yeah, I think we'll do hats again at some point. Doesn't look like a Canadian plant back there. That is not a plant. That is a big vase, rather expensive vase, but a big vase. And those are just big dried leaves in there. I don't know. I think they're palm leaves. They're just big dried leaves. They don't need any watering, which is perfect for me. But no, that's not a Canadian plant. What are your thoughts on the recent run-up in small caps IWM? I think it was due. I think they'll really perform well when the rate cutting cycle starts and the market is forward looking. Does Macro Trader have scope? I don't know what you mean by scope. Thoughts on someone pursuing multiple careers? Well, I don't know what you mean by multiple careers. You want to be a heart surgeon and a lawyer at the same time? Pick one. Pick one. But you want to be a venture capital investor and an entrepreneur at the same time? Yeah, sure. Sure. Um, okay. Earnings 10Q. Share repurchase form 4 CEO CFO management file call put ratio change in dividend. There are some of the indicators to watch in addition to full research. What else? Oh, what else? I don't think we have time. You tell me what industry you're looking at. I'll tell you what indicators you could look at. There's hundreds, if not thousands, of indicators out there. For some industries, some of them are really important and not important for other industries altogether. So China PMIs, who cares if you're in Canadian apartment REITs? They mean nothing. China PMIs and you're in dry bulk shipping means a big deal. But the growth in NOI from Canadian apartment REITs for a bulk shipper, who the hell cares, right? So you tell me what industry you're looking at. You tell me what kind of companies you're looking at. I may be able to tell you what indicators are important, but just to give a list of indicators, I don't know. Beats me. I could say China PMIs. You got to keep an eye on that, thinking that you're invested in a stock that I'm invested in that cares about that. And you'd probably say, but why? What are the key sections to go through in a 10K, 10Q? Always start with the 10K and everything. Everything. Read everything. You want to know everything there is to know about that company. Read everything. I do. Now, not everything's important, but I still read everything. Any idea when you will add the sector and portfolio construction, and around how many hours per year will you add? Any idea when I will add? Sector studies is there. Portfolio construction is there. That's been there for a long time. How many hours per year will you add? Whew. It's when I do a sector study, when I do a sub industry, it's minimum 3 weeks of deep research to get everything that I want out of that. At least 3 weeks to really understand 80% of what's going on in that industry. Sometimes a month. From that, you'll get anywhere from 3 to 5 hours of video of learning from it. And if I did that, nothing but the sector studies, let's say I could do one every 3 weeks at 5 hours. That's 85 hours a year. If I did that, good quality. I don't know that I would look so much for quantity of what you're getting as opposed to quality of what you're getting. Anybody, we have people on here, I'm sure, that have access to the applied series. If you could, for everyone else, and don't worry if you hurt my feelings, if you don't like what I do, say so. But if you could, for other people, give your feedback on, if you've watched any of the understanding videos, whether it be understanding mining, utilities, semiconductors, ocean shipping, understanding reserves, repos, Fed balance, any of that stuff, in terms of how much you learned, or if you found that it was a good learning tool for you. Provide some feedback. It's when I do a sector study, it's not 5 minutes of this is important, that's important, and this is important. For ocean shipping rates are important. No. Shipping rates are an equilibrium of supply and demand. What drives supply and what drives demand? Because if we know what drives supply and demand, we're then in a position to determine whether we think the equilibrium is going up or down. In other words, are shipping rates going up or down? I do it at that level. So it prepares you to be able to enter that industry and say, okay, well, I've been thinking about container shipping. After you watch that video, you're in a much better position to understand container shipping and the container shipping industry, to be able to say, should I buy or sell, or should I just stay away? My thinking is, if I would just stay away from ocean shipping altogether. That's me. But if I had to pick one, dry bulk, tanker, or container, or if I had to if I had to rank them, container would be at the bottom. Something I would just want to avoid because everything is great right now. It it only has downside. I don't see how you get even more excitement out of container shipping, given that you got 26% order book to fleet ratio. So tons of ships, tons. Ha 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 ha! You get what I did there? Tons of ships. A whole bunch of ships are coming online, and I don't know that voyages can get any longer. Right? This is the value in going through this is that you don't fall into traps of saying, well, this sounds good. That you have a more informed opinion. My opinion after going through the shippers is that if I'm going to be in the shipping industry, if I really, really had to be, I'm going to be in a shipping broker, not a shipper, not somebody who owns ships. I want somebody who makes money on somebody else's ship. That's a shipping broker. Um, and Clarkson's, I think, is probably one of the best, and they sell research. They have access to research, so you can have subscriptions to that. They have access to data. You can have subscriptions to that, and they're a broker. Beautiful. They make money no matter what. No matter what. Asset-light business that makes money. If I had to be in the industry right now, I'd probably say a good pairs trade would be short container shippers, long brokers. And since brokers make their money on a percentage of the charter rate, if container shipping did go up, brokers would go up because they make money on all of that stuff. So that would be a nice beta neutral trade, is to go long shipping brokers and short container shipping. I don't know that I would go short tankers or dry bulk because the ratio of new bills to order book is under 10% for both. And they're far more resilient to things like nearshoring, because you can't nearshore your energy if you don't have energy. But you can nearshore production, which would lower container demand, right? So that's the power of that stuff, is because I have a deep foot in markets, I think that way. So when I present it, I can present it that way, as opposed to just saying, here are 4 things that support demand, here are 4 things that support supply. I do think more like a market participant, so I can interpret some of that stuff. So don't think about quantity. Think about quality of what you're getting. Isn't there a software which take company SEC 10K and give a summary non-accountant version? I'm sure there would be. I don't want that. I don't want a watered down version. I want everything. I don't trust a summary to give me the information that I need, because there may be a sentence where it's like, everything turns on this sentence. Everything is about this particular sentence. Or there may be an inconsistency in the statements that I don't like. We are primarily engaged in the spot market for charters. But yet when you go to their revenues, you find that only 45% of the revenues are voyage charters. The other are time charters. But you're telling me earlier that you're really great, rates are going up, and you have exposure to these short-term rates, and you're doing really well. Is a summary going to catch that inconsistency for me? Right? I don't know that it will. Also, when I read some of the risks, sometimes there's a sentence buried in these risks where you go, sneaky. You are disclosing it, but in this little risk category, that's a little bit sneaky, right? So I want to read it all. I need to be attached to it. You need to be as close to it as you possibly can. I don't want anything to put any light between me and this company when I'm getting to know it. I don't want it summarized. Do you still plan to add the financial analysis modeling course? Yes, I do. When can we expect it? Starting September. I got to get through exam. The exam for level 3 is August, and I do a lot of work, live sessions for that. There is just no way that I could squeeze anything else in. I want that out of my way. Then it's clean sailing for me. Will we cover any tech sector like SAS or social media? In time, yes. I just don't see it as being, I think, as interesting or exciting as what was said earlier, uranium and nuclear. I think, yeah, there's growing conversation on that, especially in emerging markets. I think they're more likely to embrace that. And cybersecurity, I think, is a big thing. Somebody had also mentioned data centers. The only way to really do that well is with digital, is REITs that own data centers. Okay, that sounds, maybe there's something there. If you count calories, just count calories. No, you can't just count calories. I learned that very quickly. You cannot count calories. Fat, and a gram of fat has 9 calories. A gram of carbohydrates, I think, has like 4 or 5. A gram of protein has 4 or 5. A gram of carbohydrates has 9. You would think, well, if it's 9 and 9, they're the same. Why would you choose a gram of fat over a gram of carbohydrate? Shouldn't you be indifferent between the two? It is the level at which your insulin increases depending on what you eat. Carbohydrates will spike your insulin. While insulin levels are high, your body burns sugars, not fats. Right? So if you're getting all your calories from carbs, you're keeping your insulin level high, which means even if you cut back on calories and they're all carbs, you're still keeping a high level of insulin. You will hit something called insulin resistance, where your body weight goes down to a certain level. And no matter what you do, you can't get it below that level because you're managing calories instead of insulin level. You gotta measure the insulin level and not calories. For example, a steak has 0 glycemic index. So even though it's protein and fats, eating 500 calories of that is better for weight loss than eating 400 calories of pizza, which is got carbs in it. It's not just counting calories. I used to think that way myself, and it's not. Also, your body has to go about 12 hours to bring your insulin levels down. And while your insulin levels are coming down, you're still burning sugars, not fats. Once you get to about 12 hours, you're not burning sugars anymore. For every hour after that, you're burning fat. So you have to combine it with intermittent fasting. You have to, because once you shift from managing calories to managing insulin, weight loss is pretty straightforward. That's the whole basis of Ozempic. It was a prescription for diabetics, specifically to manage that. And now, hey, listen, the side effect is you lose weight. Well, why? Because it manages insulin levels. So if you can keep those insulin levels low, right, that's the point. So intermittent fasting, you got to get past the 12-hour mark, and then you will be burning fat. You got to keep your insulin levels low. You can you got to avoid carbs to spike, so to avoid those spikes in insulin. And if you can maintain that for 30 days, you can switch your body from being a sugar burning machine to being a fat burning machine. You can then reintroduce carbs, and you can slow down on the intermittent fasting. But you must first train your body to burn fats, not sugars. Right? Believe me, I've done the research on this. For over 7-8 years, I could not get my weight below 228. I was giving up. I was trying everything. I was counting calories. I was cutting my calories down. I was doing all of that, but I wasn't looking at the types of calories I was eating, just the number of calories I was eating. But once I switched to this intermittent fasting with lower glycemic foods, I started really honestly June 19th, where July 21, I've lost about 7 pounds. That's pretty good. Now, here's the thing. I've gotten down to 228 before and crashed. And within 2 or 3 days, I'm back at 235 because I cannot maintain it, because how I got to 228 was unsustainable. I knew that I would crash. I'm good. I've lost 7 pounds, and I say, can I maintain this? Yeah. I can maintain this without a problem. I can sail into about 2 in the afternoon without cravings. Getting to 4, unless I keep my mind occupied, I'm focused on the fact that I'm hungry. Um, but I ate at 4. It's 10 o'clock. I'm not hungry now. I mean, my calorie count today might be 1,200, 1,300, but I'm not hungry right now. I have been at this for 7 years trying to get my weight below 228, because when you have the kind of business I have, you are non-active 12, 13 hours a day, because you're sitting writing on your screen, you're making notes, you're narrating in your microphone, you're producing videos for the CFA series, for all this other stuff. You're not active. And once my dog died, I became even more inactive. So I had to do something. And it is primarily diet. So we'll check in a couple of more weeks. I'll tell you how it's going. If I can break 228, I'm 228.4. I really wish I would have saw 227, but if I can break 228, it will be the first time in like 6 or 7 years that I've been below 228. Isn't that incredible? I think it is. No food in you all day can't be good for your brain. Again, it is the type of food, right? I find that I sleep better at night. I can sit in a chair longer. My sciatica doesn't, the sciatic nerve doesn't hurt me as much. When I sleep, I used to be able to only sleep on one side. I can sleep on both sides now, and I can sleep on my back with perfect comfort. I never used to be able to do that anymore. So I feel healthier. I'm more alert during the day. I'm more present. No, I think it's working out great. What do you think is the best case for the economy under Trump, and what is the worst case? Well, I mean, best case is he extends the tax cuts, which encourages investment. It doesn't chase capital away, and the economy grows, but so will the debt. Worst case scenario is he decides to go with across the board tariffs because he thinks it's such a great idea, which it's not. The American economy becomes more inefficient because it's trying to do everything at home. He points to the fact that look at all the jobs we've created here, not realizing that those jobs are now doing things in a more inefficient way than they were done before, and the economy just keeps going down, and nobody can figure out why. That would be the worst case scenario. Any advice for analyzing call reporting data from National Credit Union Association? No, I don't know anything about that. I'm heavily invested in PGMS sector, whether that be in the futures market and the junior mining sector. In your opinion, how do you feel about the short term? PGMS, and what is that? So many acronyms out there. I can't keep them all in my head. I don't know what that is. It may come to me. Video on silver market. Watch the video on gold and on copper. There is no difference for silver. Silver follows the same economics in mining as does gold and copper. It's the same economics. And if you want to know about demand and supply dynamics, there's always an industry association for almost any metal. Google Silver Industry Association, you'll get lots of information there. And if you want to understand the economics of mining, if you watch Understanding Gold Miners, you understand silver miners. Nothing different, just a different mineral. What is a good QBank average to shoot for to pass level 1? Higher the better, I guess I would say. Anything above 70%, I think you're in there, but you want to, the higher the better. But it's what QBank are you using? I mean, is it a QBank where the answers are mostly right, or is it one where the answers are half right, half wrong? Because there's a lot of crappy QBanks out there. Where is he reading the chat from? I got my window here, and right beside, I got a chat window that is just going down the side. I don't know where you would see the chat window from. Let me, you know what I'm going to do? Oh, by the way, if you want to watch something really interesting on YouTube, I don't know if you're aware of this. Years ago, JD Vance did a TED Talk. It's pretty good. Like if you listen to it, this is way before he was even politically leaning. But it's pretty good. Let me see if I can find me on here. I got to type in my whole name. I guess I'm not known well enough on here. Let's go to my channel. This one here is live. Okay, so I'm watching live, and I can see the chat right in front of me. So you got to scroll up to find the questions that I'm looking at. If you scroll up, you'll see my name in big orange, bold and white. I'm just below that. I'm like 4 questions below that. Any advice for analyzing? Already there. Keep going down 2 more. Where's he reading the CFA chat from? You should see that now. Only 18% of charter holders are women. Do you observe an increasing amount of women becoming candidates on your website, or do you expect this percentage will remain stable? What does it matter? So when I was in a business school, both as a student and as a professor, first year is mixed, about the same, 50-50, right? Nowhere along the way was there any sign on a door that says no girls allowed. Never along the way was there a course where if you were a girl, you couldn't register for it. Nowhere along the way did that exist. Ever since I've been in university, there's never been a policy of no girls allowed. But walk into 4th year classes, walk into a 4th year finance class, it's predominantly men. Walk into a 4th year HR class, it's predominantly women. Why are we not talking about the shortage of men in the HR field? 15% of HR professionals are men, right? I mean, why are we not saying anything about that? Like, why are we so concerned about equalizing the roles for women and just ignoring men altogether? And why are we concerned about equalizing the roles for women just in jobs we think are good? Underground miners. I grew up in Timmins. Very few female underground miners. How come we're not talking about that? Only 1% of underground miners are women. How come we're not talking about that? Why do we just pick and choose certain things? And why do we only choose one gender and not the other? Nobody stopped these women in university from picking the courses they want to. They self-selected. Could it be that 18% is women have spoken and this is what they want? They don't want this. They want something else. Why do we feel the need to question women's choices and say, hey, women are not making optimal choices? There's not enough of them in finance. There's not enough of them in engineering. They're not making optimal choices. It's all full of men. So what are we implicitly saying? That women in university could benefit if more men made choices for them? No, you're not going to take HR. You're going to take finance. Clearly, we're not saying that. What are we saying to women? You're not making optimal choices. And we're going to question your decision-making ability. They've chosen. If there are only 18% of charter holders that are women, have they not made their choice? Why do we continually question their choices? No one's questioning our choices, but why do we question their choices? If you think, oh, well, because they've been deterred from taking it. Who? When? Where? How? Show me the mechanism by which somebody in first year university could not have selected a finance major by their 3rd year. Show me a mechanism by where women are not allowed to do that, and I'll stand with you to fix that. Let's fix that right now. If there is a bias, let's fix that right now. What bias exists today? That is like, the 1950s called, and they want their excuse back. This is a 1950s, 1960s excuse. I went to university in the 80s, and there was first year university was great. It was women everywhere. For somebody 19 years old, that was a good time. But there was no shortage of women anywhere in the university system. Even now today, it's 55 enrollments, 55% women, 45% men. Can we not just leave all this alone? And if women are making their choices, say, okay, you made your choice. Who are we to question your choice? You made your choice. But if we are questioning their choices, and men are taking finance and taking the STEM fields and women aren't, perhaps what women need are more men to make decisions for them. How does that sit with you? Clearly, that can't be right. Neil finally unveils his latest cardboard box. Will you be a judicious call buyer? It depends on how many people start saying that cardboard box is the best looking card they've ever seen. There are a lot of people who it's like the story about the emperor's new clothes, right? There's a lot of people perfectly willing to say those are fantastic clothes. That's fantastic clothing. Yeah. What will it take for you to join the congregation? I will sell religious artifacts to the congregation, but I'm not going in and pray. I mean, to use an analogy, right? My girlfriend says you are a silver fox. She's wise, a wise girl, and I'll take it. I'll take it. If only I can get all the women to agree with that point of view, that would be great. I did intermittent fasting a few years ago, and it worked. Unfortunately, it's not maintainable. No, it's not. No, it is not. You're right. It's not something you can sustain for a long period of time. Not these 6 and 5 hour windows. You just need to sustain it long enough to switch your body over to being a fat burning body, and then you can slowly go back to maybe once you get to a weight you want, you can go more to a maintenance schedule, which might be 8 hours, and 8 and 16, as opposed to where I am now, which is 18 and 6. By the way, how tall are you? So not quite 6'1", but not quite 6. I'd say slightly closer to 6'1" than 6. And that's without heels. Show us a sunset. So yeah, I don't know what that park is. Canadians, how do you integrate short options within RSP? Can't. TFSA can't. FHSA can't. You cannot. You can have covered calls, but no short options. The only short options is a call on stock that you own, a covered call. That would be it. Can't sell puts, not even cash secured puts, which I think is stupid. If I got the cash and I sell a put, why can I not sell a cash secured put? I think it's stupid. But let's see. Where are we? 3 hours. Okay. Now's the time you scroll to the bottom and work up for a few questions. How will Biden leaving office affect the economy? Depends on who's coming in. Right now, it looks like he's supporting Kamala Harris, but if you have an open convention, who knows? Who knows what it is? And it also depends on who wins. If Trump wins, Biden would have left office anyways. So, if it doesn't change the outcome, then it's still the Trump trade. We'll see what the talk is this week. Would you still buy Canadian REITs now? Yeah. What is the upside from here, in your opinion? Back to NAV? I think so. I think with a rate cutting cycle that these things could trade above NAV. Keep in mind that as interest rates come down, property values increase. Canada is an IFRS country. Investment property is reported at fair value. You're going to start to get fair value gains on the income statement. I think it can trade above NAV because the NAV will go higher. I think it can trade at a premium. Thoughts on the recent intervention in repo lending markets for Canadian banks? I don't follow the Canadian market well enough to know anything about that. Came for the highbrow economic analysis and mentorship, but stay for the lifestyle and dietary advice. Yeah. Ketosis bandwagon. Well, that is actually the version of the diet I'm doing is a precursor of the keto diet called the Atkins diet. And it is putting your body into ketosis. That is exactly what I'm doing. Except Atkins diet is a little bit more forgiving in the fruits that you can have. If you struggle to dip below 228, try one high carb day on which you keep dietary fiber low. Then in days following, go back to low carb. Don't tempt me. Don't tempt me. You, whatever it is you're doing, you are the devil's work, pulling me away from my focus. Begone you. What is it? My holy water. By the power of Christ, I compel you. Get the hell away from me. Yeah, I will switch to that once I break 228 and I see that I'm well below 228. I will at least reward myself a little bit. Your opinions on housing, inflation rates, employment. Oh, is that all? And most importantly, fiscal debt. Please provide your solutions to these matters as well. I think if you lower interest rates, you'll spur housing because builders aren't building spec houses because holding inventory is too expensive. The more you lower rates, the more supply you're going to get, the lower inflation goes. And employment, don't really know much about that. Fiscal debt's going to continue to go higher and higher. First step is lower rates. And I think that is what's going to happen. Share your thoughts on crypto sector. Sheep. I have no interest in ever doing anything with crypto. I don't see it as being anything more than just a fad. You're either a believer or you're not. Let's see. In your life, have you noticed a change in mannerisms or attitude with people? To me, it seems like everyone is just angrier in my area, or maybe it's just me getting older. No. Several things I've noticed is people, I think social media has made people much more willing to give their opinion when they don't have to, and give their opinion on everything when they don't have to. And, it's no longer just online. It's just out anywhere. People just offering their opinion on everything when they don't have to. Sometimes something is none of your business. And sometimes you can have an opinion, but who cares? Like, who cares? I think we need to go back to that where you kept your opinions to yourself unless you were asked. Yeah, people are angrier, but I think social media and media has a lot to do with that because we're in camps now. I can't listen to CBC because they basically insult me. And CBC makes you think that if you're not radical left-wing liberal, that you're evil, that you are the evil people, and people listen to that and they believe it. There's these evil people out there. And you don't know that they're evil except for being told by the media that these are evil people. And on the right, if you are more conservative in your views, you get told that these guys are so radically crazy. These freaking lefties are so radically crazy that they want to destroy everything in the name of just looking good. And you believe that. So we live in our camps. And we just can't understand why you'd ever want to be in the other camp. You must be stupid if you're in the other camp. There must be something wrong with you. So I see you as evil, you see me as evil. So when I'm being rude to you, I'm being rude to an evil person who needs to be told I'm part of the solution. I'm what society needs, is to put people like you in your place, and everyone believes that because everyone is so ingrained in their camps. Blame the media. The media is probably the biggest culprit for that, because your TV channel, your news network is lying to you. They're telling you half the story, or they're telling you things that they want to be true. They wish it were true, so they tell you that it is true, and it's not. They're not. No one is fair and balanced. No one is fair and balanced anymore. The media is the destruction of society here. And I think that's a big part of it, is that. The other thing that I've noticed is just the sheer lack of quality in anybody's work anymore. The the level of get byedness, that's enough. This is good enough. That's good enough. This is good enough. The level of that going on, and the rates that you're paying for this mediocre shit that you get these days, just mediocre customer service, mediocre services, mediocre products, crap, and that you're going to pay for it. I've never seen anything like that. And this is really accelerated post pandemic, is just everyone phoning it in, thinking that, you're going to pay for it anyways. Like, nobody wants to work and earn their money anymore. When the government gave out money during the pandemic, people got used to getting money. Nobody wants to earn money. I shouldn't say it in extreme words like that, but there are many people out there now that don't want to earn their money. They want to get their money. Work from home did a lot of that as well, is that, hey, when I worked from home, I got a whole bunch of stuff done at home, and I had a lot more time to myself because I didn't have to put in 40 hours a week. I put in 30 hours a week, and no one figured it out. And I got paid for 40. So I was getting money. And now you got to return to the office like, oh, now I got to go and earn the money that I was getting. And it's just this attitude that comes across in almost everything that I'm seeing now. There's just this general lack of care, crappy products, or if they're good products, ridiculous pricing. Now I sound like an old man. Back in my day, I used to go to the candy store with a nickel. I never went to the candy store with a nickel. But it just seems like everything you get is substandard, average, par, that it's hard to find anything of any decent quality anymore. I don't know. Maybe I am not changing with the times, or maybe I do remember a time when it mattered, and the 20-something never had the experience of that when it mattered. So I sound like the old man when it's like, if only you could have experienced what this was like at that time, or if only you could have experienced what an average income could afford you in terms of lifestyle that you are not getting today, and you are getting nowhere near the quality that I got when I bought what I bought when I bought it. I know that sounds like a tongue twister, but it isn't. I'm not crazy. Let's see. Are you close on getting a dog? No. I travel back and forth between Costa Rica and Canada, and until I see some place where I have stability, it's hard to get a dog, because you have to travel with a dog to going to an airport. The dog has to be in a crate. You got to check the dog, if it's a bigger dog, an hour before you get on that plane. You're on that plane for 5.5 hours. You're not going to get the dog back for another hour to 2 hours on the other side. That dog's in that crate for 8-9 hours. It is inhumane to do that. Inhumane. What I'm more likely to get in Costa Rica are some horses, some standard bred horses. And I know it sounds stupid, but I like those miniature ponies. Those little cute miniature ponies I think are great. I got stables, they're all empty. I may as well put some horses in those little things, and those miniatures look really cute. I don't know, they kind of look fun. You can't ride them or anything like that. They're more like a big dog than anything else, but I like those miniature horses. But I get a couple of riding horses, just standard bred horses. But a dog, not yet. Not yet. What do you think about Tom Lee saying IWM breaking 320? When doesn't he say the most ridiculous price target? The reason he says that is because he wants to be on the top of the list. So when it looks at all the price targets for anything, I don't think he believes what he says. He just says, well, where would I be at the top of the list so that everyone sees my name, that my name is visible everywhere? And you think, this guy's everywhere. This guy's everywhere. And you, over time, recognize his name, but you forget his wild predictions. Very little of what he says actually works out. Way back when inflation was starting to rise, he says, it's going to melt away by the end of the year. It'll just melt away. It didn't. His price targets are always way up there. At some point, you got to say your price target is about visibility for your name, not about seriousness in what you think. It's about visibility for his name. But I guess I would do the same thing if I said, well, I want to break into a space where people are going to recognize my name, especially if I'm selling a service. It's about name recognition. I don't want to be in the middle of a crowd. I want to be standing outside of the crowd. So if I'm the most bullish, and if I got all these price targets and you're looking to invest funds and you see my name, you think, well, this is, you recognize me as being a bullish investor. You think, okay, well, then let's invest with this person. He must know something. And I think his price targets are all about marketing and not about seriousness. Plus, he always looks so sad when he gives his price targets. His eyes sort of droop down like that. He always looks kind of sad. Maybe he just needs different glasses. But whenever I see him, I always think, why so sad, dude? You're so bullish on everything. Why so sad? Maybe because none of these things are working out for him. I don't know. If you were 25 years old today working a full-time job, where would you invest your money? In the clubs on the weekend. I got a lot of nice girls there. Where would I invest my money today at 25? I'd probably just buy an index fund, because at 25, I don't think I'd know very much or understand very much about the different sectors. So I'd probably buy a broad-based market index fund. And then on top of that, I might decide to add a name here or there as I started to learn more. That's with the knowledge that I have today. But if I were 25, I wouldn't have that knowledge today. I'd more likely be in on all of the high name stocks. That I'd probably be doing everything that everyone else would be doing. GameStop and Tesla and Bitcoin and all those things. I'd be doing that because I wouldn't have, 58-year-old wisdom if I was 25. I'd be doing 25-year-old things. Right? So if I were 25, I can't say that I would be doing what I'd be doing, because that would presume that I would not be acting like a 25-year-old, of which I would. So, it's sort of like saying, if I were born, 1,000 years ago in France, I would have been a devout Catholic, because that's just what you would have been. I think that's it. Where are we? 3 hours, 23 minutes, 10:37. Let's do one more here. Did you see Zuck's comments on Trump? Yeah, I did. I did. What choices he got? I mean, it's not enough. He must be aware it's not enough. He kicked Trump off of Facebook. He's on a list. To think that if Trump wins, he won't escape punishment is foolhardy. Everybody that goes into that Oval Office, Trump will pull out that list and say, who can you hurt for me? Number 14 and number 18 on the list, they're yours. And you better hurt them, otherwise you're on the list. And he will go after, he's petty and vindictive. Come on, man. You know this about him. He's going after Facebook. He's going after Facebook and hurt them as much as possible. This was not enough. Saying it's the most badass thing he's seen in his whole life. And, okay, it's a start, but you need to endorse him. You didn't endorse him. He'll remember that. You did not endorse him and you're not giving him money. He will remember that. You can buy your way into heaven here, but you must travel to Mar-a-Lago. You must bend the knee, kiss the ring, and give him money. Period. Get on board. That's what you have to do. That's simply what you have to do. If you're not going to do that, you may as well donate to the Democrats and hope that they win, because by saying I'm not donating to anyone, he will remember that you did not endorse him and you did not contribute to his campaign, but you did kick me off of Facebook. And you don't need to tell me I'm badass. I know I'm badass. Thank you very much. You didn't do the right things. You didn't bend the knee. You didn't kiss the ring. You didn't give me money. Yeah, I would not be an investor in Facebook at this point in time, because he has the power of the state behind him and he's vindictive. So yeah. Anything he can do to hurt Facebook. And if he destroys the whole industry in the process, it won't matter to him. He will have his revenge. That was not enough. He must understand that it was not enough. They want to destroy electric vehicles. And what is Musk doing? 25 million a month in a PAC, and publicly supporting Trump and praying like hell that he doesn't get hurt. That's what you have to do. And Zuck didn't do enough. He didn't do enough. Look for him to do more. I think he'll slowly figure out that, as they get closer to the election and it's a certainty that Trump is going to win, at some point he's going to have to endorse him well before that point. But I think he's in a precarious position. Okay. 3 hours, 26 minutes. I think we're good. I'm going to hit end session now. And that's it. Ciao.